Hello everyone! Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. Actually, if I hit the update, maybe. Sometimes it's already in the dashboard, but my show director, oh, there he is, yep. So he's already got the Broiler Chickens cover photo there, ready to go. It's about 10:45 here on the West Coast. Here, let's move this over here so we can see this stuff. Here on Sunday, 26th of February, so last Sunday of February 23, beg your pardon. New month as of Wednesday. And I've been sort of conjecturing that it feels like the market wants to pivot somewhere around mid March, and of course we've got the Ides of March coming up here, 15th of March. Actually, interesting enough, and I did not know this morning. I posted it in the lounge because we were chatting about it earlier this morning. The Ides of March actually used to be when debts had to be settled in the old Roman Empire. So fascinating. Anyway, was up fairly early this morning, placing a lot of charts on the lounge. Good old technical levels. So I suppose we'll go through those. It's not really like it's a runaway bull market anymore. It's not really a bear just yet. We're kind of in that sort of, are we a bull? Are we a bear? We have to wait and see who takes control. I suppose we've got a number of sort of, unknowns sort of floating out there in front of us. If I understand correctly, the SBF saga, I don't know, it's back in the 4, I guess. I don't know what the proper expression is. But people are talking about it again. Of course, the feds added more charges to his fraud and conspiracy. It's fascinating how quickly the whole world can just turn on a dime. Probably this time last year, everybody thought the guy walked on water. I hear you, but I'm going to do something else. Can't do anything else anymore. Goodness. Be interesting to see. I think I saw the total number of years if you got convicted on all charge. I think you would be something around 150 years in the slammer. So we'll see what happens. And now I couldn't believe I heard this the other day. I could not believe it. Somebody on YouTube were saying something along the lines that they have actually formally sent requests out to the Democratic Party, all the people that he made campaign contributions to, and political donations and the whole thing. They've actually sent requests out for them to give the money back. And they said that if they didn't give the money back, that they would be sued. When I was growing up, there used to be a very specific term for people that gave money, but then changed their mind and wanted the money back. But in this politically correct day and age, you're not even allowed to say that term anymore, and I'd probably get like instant cancel culture if I even said that expression. And it used to be a very, very common expression people used to use. But anyway, politically correct world, I suppose I'm not going to open up that can of worms. Of course, we've got the funny games going on with the camera and the background. You might see the green screen fall over. We kind of went like a cheap-ass route with my green screen, so it's sort of tilted on an angle. But I'm trying my best. I got to keep myself level. I don't even know. Like, I should be, the microphone should be like right here. A lot of these social media influencers and stuff, they got the microphone like right here, and it's like, okay, look at me, I'm Mr. Broadcaster. I'm not really big on that. Anyway, probably the audio sucks. My apologies if it does. I'm just an gnarly old technician. That's sort of what I do. I have to say, everything that I see about the economy, playing this silly game for 30 plus years now, everything I see about the market, if you could just simply start buying all the crap that you like and that you think is going to do well in this coming cycle, and just force yourself to hold on to it into sort of the end of 2025 through 2026 kind of idea, probably even into the latter part of the decade, but usually like in 87, for example, there was a big stock market crash, and I have a funny feeling something like that's going to happen. They really dragged that market on. I remember back, and really also too, I seem to remember the latter part of last decade, they really dragged it on as well. And then, of course, we went into the COVID crazies. So I can just feel it. We have on the site, we have a sort of challenge. We're calling it, I think, our little old French ladies challenge. The Canasta Club. That was another cool name that we had of it, where I just start accumulating. We're a vacuum in there, just trying to accumulate, suck up as many good names off of the bottom of the range as possible. And already banging out a few doubles. I know there are some of the guys on the site that are banging out doubles upon doubles upon doubles upon doubles. Unfortunately, all of those doubles being booked now were a function of did you have your act together? Did you have your shit together? You know how Brian and his expression goes. They did, and they were buying all through the fall and even really right around into the end of the year. And of course now they're getting paid handsomely on the big New Year rally. And if you're watching this for the first time and you're taking notes, and I would strongly suggest that you do that while watching my videos, because we do drop just a ton of little value bombs here and there, and they're totally random too, so I never know when the hell I'm going to come out with something that's like, oh, you should probably write that down. Something as simple as buy when it snows and sell when it goes. I mean, it's just so simple. And the irony of it all is that the simpler you keep this whole game of investing, don't overthink it. Don't over leverage yourself. Don't over stress about this, right? Just keep it simple, stupid, and follow just time-tested principles. You do really well. In fact, I used to tell people, I have 2 rules of investing. And if you follow the rules, rule number 1, try and work with some sort of algorithm. Here's a great Google short for you, if there ever was one. And number 2, don't take too big a bet. Make sure that, the size of your bet relative to the amount of money that you got to work with is relatively small. When it came to like investing, and when I was running a book of brokerage business, it would just be simple, like, 5%. Don't put more than 5% of your money into any one play. I did go off into the futures land, and I was a futures broker. I was an options broker, as well as financial planner and all that kind of crap. So there's no story anybody can tell me that really refutes or breaks those 2 rules. Work with some sort of algorithm, if then else. I mean, Al, maybe pull up the Chat GPT. Say, give me the 3 most popular reasons for buying something. It'd be interesting to see what Chat GPT says. Maybe it's something like it's a sentiment score. Well, Google's search is exponentially rising. That would be fine. That would be an excellent fundamental reason. As a gnarly old technician, because I've been watching price charts forever, I always think it's a good idea to try and buy at the bottom end of the range. And then as the market's working back up to things like 50% rules, just start spoon feeding out and selling halves on doubles, especially if these are little junior names that, fall 90% from their peaks. Getting a double to get that risk-free trade is actually completely realistic. And once you get into that risk-free position, I think your job as a especially if you can think bigger picture, if you can think like 4 or 5 years down the road, just try and leave the stuff alone. That's how silly little things like this, $500 into, hundreds of thousands of bucks. And even though that, I did this screenshot the day this hit 100,000 because that was the whole point of this. That was the whole point of this exercise. Is I basically said I was going to turn 500 and turn it into 100 G's. But I can tell you for certain we've taken out of this original 500 that was invested. We took out 100 plus another 50 plus another 175, so that's 300 and some odd $1,000 from that 500 bucks. And it was just simply following that very simple principle. People way overthink this stuff. And the irony of it all, of course, from a charter's perspective, and you guys that are like super active and super consistent, watching these, taking notes, hell, some of you have gone and actually created your own websites and your own businesses. Congratulations. I hope you remember me when you're rich and famous. I think probably the most important thing to think about now is that we're actually in the window that you should be buying in. And of course you go out into the public and you say, and use your family. Most of you are fairly computer oriented. So, you might yourself be looking at the equation from a slightly different perspective, but use the family at the Thanksgiving dinner table analogy. It's perfect. So, I was talking to a great uncle of mine, my stepmother's brother. I mean, he's like 70 years old now or something. And he is just, I guess crypto's not doing so good. When that guy is talking like that, you got to be in there buying. Because every cycle top, the son of a gun, Brian, should I be buying Bitcoin now? How about that Ethereum thing? Should I be buying that? That's when you sell. And it's just so simple. It's ridiculous. So anyway, the irony of this game of investing is the simpler you keep this thing, the better. And there's just some time-tested principles that just work. The only problem is, as Andre said here, is actually doing the right thing when you play this game is actually pretty boring. And it's sort of like, I thought I was supposed to be this big sexy rock star trader guy, when all I am is I'm a little old lady and I'm off to play canasta and nothing's doubled today, so I'm going to turn my screen off and go enjoy life. Oh, that's kind of weird. Anyway, that's the old financial planner talking. And sadly, of course, in this crypto space, in the YouTube space, and in the social media space and all that kind of stuff, financial planners don't get a lot of likes. They don't get a lot of subscribers because they're kind of boring and they're really not very sexy. Sorry. I'm in my TRI hoodie, and that's about as sexy as you're going to get out of me. Mind you, I will talk about how degen should we make this conversation right off the bat? Should we talk about cum shots? Because I took a shot on a cum proxy, and it did work. So that's pretty sexy, I got to say. Hey, look at what we got here. Nice rally. So actually interesting. Most of the weekend, especially yesterday, was pretty quiet. So actually, it's kind of nice to see. Down in the juniors, let's see what we got going on here. As I had sort of alluded to there, I didn't really be too specific, but it's awfully tough coming in on the buy side down here right now. If anything, you got to make sure you have all your sell orders working and things are, you're starting to sell into the rallies like this one. This is my controversial pick. But, all I care, I'm like a gnarly old sort of speculator guy. I don't really care about all the silliness in the market. What I care about is, can I see big fat W's working in price? I mean, this is so cliche, it's ridiculous. And of course, I don't have all my charts all pretty, so it's real messy. But nonetheless, really good example of what I do. I mean, is anybody 5-10 years from now going to remember Cum Inu wrapped ether? I mean, this is crazy. But all I care is the asset was way up there, came all the way down to the bottom. Put in, I have to say, as you know, if I was going to write a course on trading, this is exactly what you want to see. Market heads down, then it heads back up, then back down, and then breaks out. And so really, you know, keep it simple, stupid, as I said. You want to try and find an algorithm, and this algorithm could just be simple, as simple as if price makes a higher high and a higher low, then you are going to buy the breakout, the middle part of the W, and you're going to risk to a break to new lows, and you're going to try and force yourself to take profits at 2 to 1 or thereabouts. In this case, this is an even better case because, of course, little old lady, sell half on a double, keep it simple, stupid. It turns out that our double price was right in this area here, and of course, sell half on a double. Out went half. I left this trade up to Sjord to manage, so it is what it is. I'm not going to really get too stressed about execution from his perspective. Broken telephone game. I mean, if I really wanted it done like precisely, then I should be doing it myself. And oh, FYI, actually, Sjord just ordered me one of these ledger things, so now I have to spend the next week or two getting up to speed with Ledger and buying all this stuff on the blockchain and moving it over to Ledger and kissing these centralized exchanges goodbye. So anyway, that's the big sort of learning curve that I'm going through right now. But here's a good example where, you know, if you just identify the fact that we have this big honking W down in here, you buy the W, you risk to a break of the lows, and away you go. And actually, there's a really, really good example of one or two of these ideas. I know the only question is, where the hell did I have it? I think it was here. I think Link was a really, really good example of one that I bought last fall. And this Sushi, using the exact same principles. So actually not a bad idea we check in on these guys. So there's the Sushi. There was the original W. Think algorithm. This guy's actually, I bought this level right here, a little bit high. So he's actually still underwater, but it's exactly the same logic. And, you know, as a little old lady, should I be in there tinkering with this? Should I be screwing around with the market here? No, just leave it alone. Let your money work. So anyway, you know, there's a good example of one that hasn't gone ballistic yet. That's just sitting right there. If you want to join me, feel free. There's another one here, Link, that we bought, and this one's been a wild roller coaster. Same logic, you know, you see the W's down in here. So I bought that, and look how close we came to getting stopped out. But you just got to be patient, disciplined, don't touch it. Just let your money work. Turns out stops were never hit. Now we're back to scratch again. Just sitting there. And actually, I was thinking about buying some more down here off of this trader level. I just never got around to it. That's a bit of a fail on my part. But it's just such a good demonstration of the principle. In this case, I actually bought 2 times. So there's my average, and I'm just sitting basically at my cost basis. If I'm not, and really, you know, we'll see this thing probably goes crazy when you see it go through that level now, something like that, because you can see there's that high, that high, that high. So clearly there's some sort of big obstacle. If you see this link up through here, poof, it's off to the races. So you're more than welcome to join me on that one. And this is the weird thing about investing, is that, you know, I'll show you names that I bought and levels that I'm in, and you sit there and go, boring. Yeah, I could sit there and pick my nose too, Brian, but it's not much fun. You know, I want the sex. I want the hot ones that are going crazy. But I would actually argue, you know, like something like on this, you can't come in there and buy that there. You just can't do that. You just can't. The algo is just simply, if the market has a W, then buy the W, else don't do anything. It's just that simple, Sean. If then else. If the market has a W, i.e. higher lows and now higher highs, you buy the W. Else, don't buy. If, then, else. Just that simple. You know, of course, I'm a big fan of 3 reasons for a trade. You could say, if the market is at the bottom end of the trading range for the past 52 weeks, and maybe we have a bullish momentum divergence that is either forming or confirmed through here, and you have a W in price, then you have your 3 unrelated reasons to justify taking a trade. And really, that's what I'm trying to teach you in the level 1 program. Keep in mind that a lot of traders that I used to work with, in fact, I think Bitcoin just recently did this example. You know, if you're at the point where you're like, hey man, I'm a fancy schmancy trader, look at me, then, you know, you can start sort of, you know, what's the appropriate term? Really vetting out what it is that's going to get you to act. And you got to get to the point where you're very, very comfortable with the activity. So I wanted to show you what I thought was a good example here this morning. The only problem is I'm not sure which chart I have it on. I've got watching here. Look at this. This is a beautiful example. This is actually like candle bars themselves. These are when you have a bar that opens up below. Here's a great Google short here for you. If you have a candle that opens up lower than the previous sessions and end up turning around and closing higher than the previous sessions, in this case 2 previous sessions, this is a daily chart, this candle is what's known as a key reversal. And notice also too, the key reversal also would, if we break through this high, the key reversal activates. And notice that this key reversal is on basically the heels of a big W. So there you go, Sean. There's a algo, if then else, to buy W's, and you want to throw in a key reversal signal that the algo says, if the market is making higher lows and higher highs, then buy the W, the breakout of the higher high, and the higher high on the right-hand side of your chart is made with a key reversal bar. Oh my goodness. I mean, that's just absolute. That is the shit. I mean, it just doesn't get any better than that, folks. I mean, look at what's happening here. And this is an interesting one because this is one where you could use like a third reason to justify your actions is fundamental. Because if you know what this coin's business model is, it's fascinating how their direct competition, who they're trying to unseat, they happen to have a big scandal going on right now. And all of the teenage girls around North America are very, very angry at this platform because their favorite singer this past summer got completely screwed over by them. And these guys are a realistic alternative to that platform. And all of a sudden, look at this chart. So this is a really good example where we've been waiting forever for some sort of sign of a technical bottom. We had the people who actually do this story come in and give us a really good presentation. And, you know, after the presentation I heard, I said, well, you know what? I would prefer to be an equity investor in you rather than buy your coin. But nonetheless, Sjord went and bought a whack of his coin. And as I said, you know, they happen to be in direct competition with Ticketmaster. So what a surprise. As soon as Ticketmaster starts, you know, being grilled and is under fire, in fact, you could make the argument that looks like a cute little cup and handle. There's a little bit of a W there. I mean, we probably want to see a bit more bullish structure going forward. You know, maybe through those Senate hearings, there's a call to break the Ticketmaster monopoly. And then they start saying things like, now, is there anybody out there that could actually give us an alternative to Ticketmaster? And then all of a sudden, this thing just goes absolutely crazy. But it's just kind of an interesting anecdote. I happen to have it on my screen. Well, here is actually a W with key reversal bars sprinkled in too, which are hugely bullish bars and also coming in on heavy volume too. So clearly somebody likes this thing. Anyway, cool to see. What did I want to show you? I was there was something I wanted to show you, but I got sidetracked because this thing was on the screen. I think it was Bitcoin we were talking about there, right? Let's see, where the hell's Bitcoin on this chart? Up here, boom. No, not that one. Boom. No, doesn't look like that one. Darn. Anyway. And actually, it's probably better. You know what I'm going to do? I think it's probably smarter is I'm just going to go through and I'm just going to talk through the charts that I posted in the lounge this morning. Because they're all pretty and I have all the levels on them and everything. So make it simple. All right. So once upon a time in a land far, far away, I woke up this morning and there was our chart. We had a pretty precipitous fall here over the past, I don't know, 4 or 5 days. This is a half-hour chart. So we're up there at 24 and change. We worked our way down to 22 and change. Sounds like about a $2,000 trading range. 50%, the middle of the range, about 23 and change. What's the odds of us coming back and hitting this 50% rule? Usually pretty good. WD Gann. That's basically his bread and butter. And he would say the statistical odds are that this 50% rule is hit in about 50% of the time that it took to go from that high to that low. This would be called sort of the market's vibrational signature. And probably 50% of that takes us somewhere out into here. So that's sort of what I woke up to this morning. We were sort of working our way lower, and I was kind of thinking megaphone. We had 1, 2, was looking for 3, and then we had 1, 2, was looking for 3, and the market just kind of went soft here through the yesterday. It's very, very quiet market. I had made reference earlier about 3 reasons for a trade. This is the chart that I wanted to show you earlier. Because if we actually, this is the Bitcoin now on the 4-hour chart. This is my fun Tesla 4-hour charts. You'll notice that that was a 61.8 fib, and it was also an ABCD. So we just looked at this range here. Right, we said 24 and change down to 22 and change. So, this high way up here, 25 and change, and this low, 21 and change. Its reload zone is basically this 61.8, about 22.8, all the way down to 22.2. So I would actually expect the market to put up a fight through this green box here. And I used to work with one pit trader in particular. He just lived by 61.8 fibs. And affectionately, we all called him at the old prop firm. Everybody in trading, they don't really seem to like to work by their real names. They all have funny sort of side names. So his name was Mountain Man because he used to love to snowboard, and he lived in Colorado in the mountains, and he had a big old grizzly beard, and he was bald, and he looked like a mountain man. So that's what we called him. Really, really good trader, but he would just religiously trade this 61.8 fib level. So you can see here's an example where, a really veteran trader who's not subject to, anxiety attacks, and I don't really know what I'm doing, and is Bitcoin trending? Is it going up? Is it going down? I don't know. How do you, function in the marketplace? This guy was like, look, I've played this game so often. When 61.8's hit, boom, I buy 2 units, at least. Maybe he buys 3 units, who knows. Usually what ends up happening on these kind of 61.8 tags, because it's such a big level, there are going to be people that play the market algorithmically, kind of like what Andre's saying there, if then else. And it's just simply, and I've actually told people this, and in the level 3 program, we have a module on trading with the DOM. And you can literally watch as markets come down into things like 61.8 fib levels. All of the algorithms all start coming alive in, like, say, the ES futures. It's really cool to watch. So there are a lot of people that will just simply look at, this is what I do. I buy 2 or 3 units at the 61.8. Any kind of bounce at all, a reversion back to the mean, if you will. I'm going to let one go. I'll move my stop to scratch on the remaining whatever I have left and just see where the wind blows. I could make the argument that, we just had a 61.8 tag. Maybe we just come down. Notice that that was this is what's known as a harmonic PRZ, or potential reversal zone. You might just find, and keep in mind, mountains long from this 61.8 level down here, you may find that this thing comes down, plays with that PRZ, but never does trade back down to that 61.8. You've heard Brian talk about candle body lows for trade location. So you can see how those candle body lows, you might find it just dips down here, puts in a big W, and then starts to climb the wall of worry again. Maybe we rally all the way right back up to 61.8 on the other side. And then he would be sitting there doing the exact opposite trade. Very typical sort of professional traders trade there. So that's kind of what I'm seeing here. No guarantees that this is the bottom, and I would even say V-bottoms by definition need to be tested. Notice how this was a V-top. Market came straight back down, and what happened next? Well, we rallied right back up and tested this top. Kind of floundered around, went up, I got to test it again. Well, I came back off, and I got to test this high now. Oh, no, I got to test this high again. But the point here is that V-tops don't really like to float out there on their own. Here's a good example. Notice this V-bottom, market rallies away, and we might be sort of like in this phase right now, here off of this V-bottom. Notice the market runs out of steam, comes right back down, and tests this bottom. I'm a big fan of candle body lows for trade location, so you probably see Brian sniffing around down here. This particular case, notice they had to actually probe a little bit lower, probably run some stops out there, and then take it back up. And then notice, after the sell-off, run the stops, little consolidation. Look at this cool bar down here. They brought the market right back down to candle body lows for trade location. You haven't heard me say that once or twice today. I'd suggest you probably write that down. This is a killer, bringing you alpha. Somebody hashtag, there's some more alpha for you. Candle body lows for trade location. And then look at what happened. The whole damn market just took off like a rocket. So, point here is, we just made a V-bottom. My hunch is they're probably setting these candle body lows for trade location up as a trade level going forward. If these lows do hold and we W out, well, then we can start climbing the wall of worry. And we're probably going to work our way back up. You can notice, remember I had said earlier, sort of your knee-jerk, keep it simple, stupid, what is my price objective, usually is a nice 50% retracement of whatever the previous range is. So, for the guy like Mountain who bought this level here, I would imagine if, say, he bought 3, then let 1 go on the sort of the bounce back to a moving average, move your stop to scratch, maybe let another one go at that 50% level, and then maybe the third one up top here in this reload short zone. Who knows? But the point being that actually that 50% retracement level, actually that seems like a very realistic sort of dead cat bounce objective here in the short term. So if we go back to that 27-minute chart, right, and we look, this is actually interesting, and I don't know the name of this pattern, but I've seen this repeatedly through my career, where you get sort of a dead cat bounce off of the lows, and then we sort of consolidate and we make higher highs and higher lows. See a lot of people on YouTube and stuff sort of saying, well, this was a run of these liquidity events, and you want to try and hunt your long in here off of the sort of the initial reaction and then play long. I don't think that that's totally correct. I think what you really should do is, what I think's happened here is that there was a trend line. I think it was a pretty well-respected trend line. 1, 2, 3, that's pretty solid level. 4, you notice how the market broke out, put in an empire right off it that puked out, then tried to rally back and recapture it. I think this is a pretty legit trend line. So what's happened here is you let the market trade back to the trend line, but you can't take the trade here. You got to wait for the market structure on the other side. And then notice, hey, look at all these W's. There's one W there that confirmed. There's also this W here. And these would actually be your trade setup levels. But the point being that I've seen this pattern repeatedly in my career where you get this sort of spike and then you get this sort of, I don't know how to describe it. It's a channel, but it's a very angled channel. It's higher highs and higher lows. And then once we sort of get to the end of this channel consolidation period, there's almost like an equal move from the other side of this pattern. I don't know what it's called, but I've seen it so many times in my career. Every time I mention it on the site, I always say the same thing. I have no idea what the name of it is. And we always come up with funny names. It's a beamish. That's what it is. Who knows? Anyway, notice there's 50% rule. Remember we had said that trend line. And actually, this is an interesting analogy. It says, Chris, now would be a good time to insert ads. Maybe, I don't know, Chris, if you could click on the... I don't mind it having an ad because this is what do they call it, monetized or whatever. But click the button that says but people can skip the ad if they want to.
Yeah, we've already got that setting on. If I hit that button, then they're going to get an ad right in the middle of this video. So
yeah, no, we don't want that. Anyway. All right. That's just funny how YouTube reminded me, hey, you better we're here to make money off your video. Time to put an ad in. Anyway. So, higher highs and higher lows. It's interesting we put in this little M right here. I was wondering how that was going to play out. So now let's go to real time. So this is sort of what I saw first thing this morning. Let's see if there was anything else. Oh yeah, we should check in on the breadth. So waking up this morning, we had this really, go back and watch the videos through last week. We had this really interesting little consolidation here in the breadth, and the market could have gone one way or the other. And I think I was saying to you guys just a minute ago that what we had was, where the hell can I show you this? I know I had it on here somewhere. Yeah, here it is. All right, so you can see, look at the end result of this. This is after, this morning you wake up, have your coffee. There was that funny little M. But we were still stuck in this channel, and I sort of posted in the lounge. I didn't know which way we were going to break here. We were either going to break, and remember, this pattern is technically a bullish pattern. So we were either going to break to the upside, or we were going to break to the downside. Turns out we broke to the upside. And, we have a longtime site member, Colin, who on Hero, I think, is the name of the... Hero Exchange? I think that's what it's called. I always get it wrong. Anyway, Collins Pump Chaser Zone and Dump Chaser Zone, 38.2. I like to affectionately call that the Ray Burchett level. He was the guy who taught me years and years ago. And there's that 50% rule we talked about earlier. And I thought this was fascinating as I was getting ready for the video and we were seeing the market try to resolve this. Notice there's a W there. So down, up, down. And, kind of like if, then, else. If we break out through the top, of course, at some point, this pattern should have played itself out. Looks like it was off of there eventually. I don't know. Maybe there has to be like 4 tags. 1, 2, 3, 4, 5. I don't know. 1, 2, 3. I'm not, again, I don't know how the math of this works. I've just seen this pattern so many times in my career. It's ridiculous. Anyway. So I did a Foggenbaum off of this, and I was just like, well, if we do W out here, because now we've got another higher high, where does that paint us as a target? And I thought that was interesting. Look at what 2.618 lines up. So nice. Right on that 50% level. And then, if we do our A, B, C, D kind of thing, again, no idea what the hell the name of this thing is. But I've noticed if we go off of sort of the initial surge high, and I guess that would be there. And then clone that. And really all this last point is... Hey, thank you, Paul. Paul donated a big 50 RONs to us. Paul's awfully generous. Actually, you know, also I think Paul, he really likes this 61.8 fib as a trade level. I wouldn't surprise me if Paul actually is long off of that level, but he's got all the RONs in the universe, so he's handing out RONs right, left, and center. You can make the argument that's a pretty good trade location. Bear ABCD objective, Mountain Man. Do we have a bullish divergence through here? Sort of. MACD actually created a bit of a bull div. That'd be interesting. Let's see what that looks like. Probably came in a little bit late. Probably not off of this 4 hour. My hunch is probably if you drill down to like sort of 15-minute or something like that, you probably had a bull div that came in there. Yeah, see, this one's off of that low. That's huge. Be interesting to see, like if we go down to like, I don't know, 9-minute chart. Do we actually see a div down here? So that's there to there. And look at that. See, huge dump in MACD on those lows. This went to lower low in price, and notice MACD did not go to new lows. So div, and actually when you zoom in on this, look at that cute little bottom right there. So yeah, I hate to say it, there was a pretty good trade right off of that PRZ. Of course, you can see the top of this green box, that's the Mountain Man level. So I guess that makes sense. You know, would have been, and keep in mind, I don't recommend new people to trading to do this. This is extremely difficult to be able to blindly step in there and just buy that 61.8 with the market heading straight down. My hunch is if you went on like TradingView platforms and stuff and talked to the kids about how they felt, everybody was saying, oh my God, this is it, we're going to zero. And of course, it turns out that was actually the lowest of the lows. And Murphy's Law, that's how it always seems to go. Anyway, all right, so back to our story. Thank you very much for the donation, Paul. Appreciate it. So, dead cat bounce. It is this, and I used to call this a tweezers. I don't know whether that's actually the right term, but to me, that's what it sort of feels like. Is it's like tweezers kind of action. That's not the right terminology though, so that's why I don't really like to say that too often. But anyway. So, point here is, I think we're sort of, this is a pattern unto itself, and I think it is completing. As you can see, 38.2s, and you've heard me talk repeatedly in the past. 38.2s by definition should be, you should expect the market to trade to them. If a market can't, then actually that's a really, really dangerous sign. And sometimes if we just keep going down, 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 you can't get that 38.2. Then when the market does bottom and it turns back up, I mean, the market just goes absolutely insane. You know, and a year, or I guess, 5 years ago in Bitcoin, that's exactly what happened. And I don't know where I can show you that. One of these charts blank. Maybe, nope. Anyway, let's go. Way back when. It's going to take forever. I thought it was on a daily chart there. Oh, there we are. So here's a good example where if you don't get that 38.2, notice in this particular one, you see how the market didn't really stop at 38.2, and it just went blowing straight up into 61.8. So that's not a sustainable move. If anything, kind of like what you saw this cycle, this was actually a little bit more of a sustainable move. So we get the 38.2, it's pretty close, you know. Then a bit of a consolidation, and basically market didn't look back, eh? Just straight higher, no look back at all, right? So, that's not exactly 38.2, but hopefully you get my drift, right? If you can get that move back up, then a consolidation, then it just sets the stage for just an absolutely insane rally. Versus this one, we didn't get the 38.2. I mean, we got a bit of it, but really no real consolidation in earnest. We blasted straight up to 61.8, and on the other side of it, we literally had to come almost all the way right back down to the original bottom. So if anything, notice like that, right back down to 88.6. So if anything, you would, believe it or not, I would prefer that the market sort of settle down and move to 38.2s, but then just calm down, do some consolidation. And I suppose the irony of all that is 38.2 off of this range, which I kind of like the idea of it trading to that through the summer. That would take us all the way up here into 35. And in a weird sort of way, you can kind of see that that's kind of what the market has in mind here. Because this range right here, inverted head and shoulders, the way that you come up with the price target there is you just take the distance from the head back to the neckline, and then you just project that 200%, or basically, what I like to call that parking garage, which I teach in our education program. Extensions, and there is 200% up top there. Of course, you got to make sure these numbers are accurate. I'm not always the best at doing that. All right, so interesting. We have an 877 off of this original bottom, 200% and 38.2. So really heading through the summer, I love the idea of this market consolidating, breaking out, heading up to 38.2 as its ultimate objective. This parking garage, usually the top of the parking garage, right up in here, 200%. Well, I through this trend line just happened to be a couple peaks, and this low here, I love low to high trend line kind of ideas, but that would basically imply, some sort of rally up into that sort of window up in there, and that would be sort of, May, June, July, somewhere up in there. I like that. That's not a terrible idea. All right, kind of got off topic there. Sorry about that. Let's try and stay focused. So in the near term, I like the idea of range. That works well for me. Mountain man to mountain man? It wouldn't surprise me. It'd be interesting to see whether our algo tells us to go back on the long side. Right now the algo is sitting on the sidelines. I have to say, I was pretty pleased with its signal the other day. I think that is that chart. So there's where the algo last told us to sort of get out and just sort of cool your jets. I showed you a moment ago from this morning. In the lounge when I wake up, I like to post a whole bunch of just sort of this is what I'm seeing. Doesn't necessarily mean I'm right or wrong, just what I'm seeing. So we had a really interesting consolidation right in this area here. And that also corresponds with this consolidation. And price-wise, that lined up perfectly with this consolidation right in here. No idea which way this was going to break, but we just had to let it play itself out. We could have very easily held these bottoms and started working our way higher, but the market puked out to the downside. I also think, too, that this was highly, highly suspect because they really pulled a fast one in the options markets. And I've been sort of talking about this recently. Ironically enough, I do believe that crypto has officially become securitized, whether you like it or not. I suppose the only thing that's sort of missing from this equation is when does the Ethereum ETF start coming out? I think they're still trying to figure out where the base of that is. Now that Bitcoin has its ETF out, what I'm noticing is staggering market manipulation around this thing. And this is the whole securitization of this. You notice that they left a gap. This is Friday's price action. Last week, they basically rallied the market into this very important strike. There's 12,000 calls on this strike. That if the market had expired below the calls, then the calls would have expired worthless. But what was really interesting is, and the law changed about, about 20 years ago. If an option actually expires slightly in the money, then they can actually force the auto exercise of the option, whether the holder of the call option wants it or not. And of course, they say that because, well, we want to, this is all about consumer protectionism. And we wouldn't want an option that has actual intrinsic value to expire worthless and the buyer of the option to be completely screwed out. But what the public doesn't understand is it works both ways. If I really wanted to sell an asset and I wanted to get the absolute top dollar for it, but I really didn't want the asset to go up in price, then what I'm going to do is I'm going to write a whole bunch of calls, and I watched them do this on the stock market, on the S&P 500, into the January 2020 leap options expiry. And I was jumping up and down in the public and barking about it. Go look at what the stock market did following the peak in prices in January 2020. I mean, it's absolutely staggering what happened. It was like literally a transfer of trillions of dollars of wealth from the 1%, or from the public, sadly, because the public all got exercised on call options that they bought because everybody said the stock market was so awesome. And they instantly got exercised, and then literally the day after the exercise, and now you officially own this BITO from $15. Merry Christmas. The whole goddamn market rolled over. And, into March of that year, 2.5 months later, we all know what happened. And then, of course, it was the most beautiful government bailout. Stock market collapses. And the government takes your tax dollars and goes and bails out the stock market. Should we be mortgaging the future? Shut the fuck up and give them the money. You all remember and know about me talking about that, right? So this is exactly the same thing happened here. Identical. And the worst part about this is, of course, you hear, with crypto, you hear Mr. Gessler and all that crap, and now the SEC is going to come down hard on crypto. Oh, by the way, all of this that you see on the screen, completely outside of the SEC's jurisdiction. They can't even comment on options. It's not part of their mandate. They're all about the stock market, the Securities and Exchange being the key word, commission. Options trade on a completely different exchange, the Chicago Board Options Exchange. So it's not even in New York. It's over halfway across the country in Chicago. It's like comparing Bitcoin futures, and we all remember Bitcoin Dad from the last cycle. In fact, actually, probably a lot of people don't remember him. What was his name? Garzarelli or something like that? He was all about Bitcoin futures and how he wanted to regulate Bitcoin as a futures and a commodity. Not a security, commodity. Anyway, so the point here is that I think there was a massive, just the most perfect transfer of wealth from the people that are operating this ETF and the public. And the public was conveniently went long this ETF basically at the very top of the market. Now, I suppose, in hindsight, if those people can just, buy the stock and put it away and forget about it, they'll probably do okay. I gotta find a chart that doesn't. It's not all written up here. Hold on. Actually, this one. No, maybe this one. It's interesting how FUMCs play their role. You know, higher highs and higher lows. I think we're, you know, so I'm not ready to like say that, hey, you know, we got trouble here. This thing's heading down in earnest. I would actually argue, and actually this is what I've said on the public tweet. Where the hell's that? Over here. Over here. And then over here. So when I look, this is sort of like medium term now. You know, here's that short term top. Mountain Man was 61.8 fib off of this range. So we pivoted here. I kind of thought that we were going to see Bitcoin come down and make some sort of head and shoulders top. Does it come straight down in a line? Probably not. It's back and forth. And actually what I've even said here is counter trend rallies into this reload short zone now. I actually kind of like as shorting windows. I don't think it's a good idea to sell on, you know, the market. You know, you're not going to sell into a mountain man level down below. That's if we go back to, give me a second here. Yeah, if we go back to this chart, right, I'm not going to sell into that low there. But what I might consider, especially now that we're starting to see the market work its way back up, is, geez, where the hell do I have it? Too many charts. Nope, that's too big. Darn. Too many charts, too little time. Maybe it's off of this one. Well. Yeah, fudge. Just give me a second here. I had such pretty charts this morning. I don't know what I did with them. Anyway, I guess we can just draw this up. No big deal. There. Down to there. Reload zone. Boom. So there's 61.8. You're going to sell into that. That's not a very good idea. Could we rally back up? And that represents a good shorting window. I kind of like that thinking. Also like the idea that, you know, we'll go after some cheap liquidity. So that high right there has probably got a whole bunch of stop loss orders right around it. That wouldn't surprise me. You also see the momentum indicators. Big, like, if anything, over the past couple weeks or so, I've been sort of barking that, hey, you know, we've got a lot of signs of lower highs and lower lows in our momentum indicators, but price is trying to make higher highs here. And that was a bit bothersome to me, this kind of divergence kind of idea. Willie was stupidly overbought, but you can see a lot of that has now relieved itself. So now we actually have a bullish divergence here. And you see Willie is actually officially stupidly oversold. So you could technically make the argument here that if you are a bear, then at the very least you should just cool your jets. Just slow down. I don't think it's a very good place to be a seller anyway. And now, you know, if we think about things like trend lines, if I go boobity boo, technically we actually get a buy signal if we can get any kind of W over here. I wouldn't necessarily call that a buy. I have seen a few people on YouTube posting buy setups and stuff and say this is the way you trade. Frankly speaking, I think that's dangerous. You really should see some sort of market structure over here, W's, to justify you actually pulling the trigger. And, you know, usually what I say is, you know, trade location. All right, you know, you could say top of Mountain Man. You know, we're starting to get into attractive area. You're not chasing an up market, so that's always good. But I've often seen that markets will actually just sort of walk their way down this trend line. And anybody who stepped in right there, you're just asking for trouble. So I really think it's, if you are a bull, great, awesome. Like I said, got Willie Stupid. You got a bull div in MACD. Looks like the bears they were relatively active on this bar, but over the weekend here, they've just disappeared. Now, are they going to bid price back up into this original breakdown level? For the adults coming back from the weekend, and then they go and do something like put in a top here and then start working the market back down. That wouldn't surprise me. So I think we're still a little bit early to come out with outright buy signals. As well too, and I think the breadth indicator is doing an absolutely fantastic job. It's kept us on the right side of the market here. S&Ps are finally getting oversold, so that's a good sign. I wouldn't actually mind seeing the broader cryptoverse actually get oversold. We do have the crypto top 30. They are oversold. So if anything, I like the idea now that we're probably coming into some sort of seasonal pivot, and the Ides of March kind of idea. So if we go, as I said there just a few minutes ago, and you saw that image in the chat room that I had on there. Nope, not that one. That should be I need to get more organized when I do this. It drives me crazy. This one here, right? When I woke up this morning, I saw this funny pattern. If we do actually go straight up like this, then what this tells me is we're going to run into this trend line underneath, and then this is going to be a V bottom, right? And V bottoms like to be tested. It might take some time for it to be tested, but they like to be tested. So if this V bottom is just left floating out there, then we're probably going to rally up into this resistance line, am out, and then notice this trend line we talked about earlier. They come and bring it right back down against this trend line and test that low again. So I don't really, I don't fancy this a really solid bottom here, folks. We're back down to that half-hour chart. This is a lower time frame trade setup, and once we get up into this area, I would be very, very leery. I don't think that this is the bottom. But what I do think is that they've got the market in a nice, comfortable trading range here. The bulls got the ball. It's the middle of Sunday, so that kind of makes sense too. From what I understand, Asia's feeling a little bit more optimistic. So the bulls got the ball. Let's see where they take the ball. And probably that tweezers target, if we change this to Collins dump chaser zone, I guess, yeah, dump chaser. So that would be 38.2 to 50%. Yeah, right into that window. Seems completely realistic to me. Once we get to that window, then we have to start thinking, okay, now what the hell is going to happen next? The good part about it, like I said, Willie's stupid, market in bull div. So if anything, if you're a bear, you're just going to have to let this play itself out. It's going to take some time. But we have to wait for a new bearish market structure to come in. That might be an empire. It might be an outright M. It might be an outside downside Q reversal. It might be an inside bar. Something. Right now, there's nothing to suggest the idea that this dead cat bounce rally is over yet. So I do like the idea, like I said there just a moment ago, that probably your upside objective. I don't see any reason why this 2.618 shouldn't be hit. Seems logical. Good old Foggenbaums and all that kind of talk. So, and there's that trend line that I was alluding to. This is off of a high to low trend line, and I really like it as an objective. So I can even make that nice and big, right? So that was off of, you can see this line has been respected quite a bit going through here. So I like that as an objective. Probably just going to oscillate around it a bit. So that's Bitcoin. Doing the same logic on something like Ethereum this morning. So Ethereum, I was thinking a bull ABCD in the middle of last week. You know, we had this low and then they made this low. And I remember sort of middle of last week, I was kind of like, well, you know, if they can paint another low in here and turn back up, we got a beautiful, you know, bullish bot flagpole kind of idea. Or there's the flagpole. This is the flag pennant, really. And, you know, ABCD continuation way up top. Then they started painting all of these M's up here, and I was like, oh, this looks horrible. So I just left the idea alone. Then they just started cascading lower, breaking key support as they went. We had a new low that was made here. So, you know, this is the A, B, C, D. Drew the CD leg off of this low. And you notice we went straight up, which is a little concerning because that's kind of what we're doing now. And then, look at this rolling top right against these trend line. Just rolling lower highs. Pain, 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 and then puke out again. So just no 3 higher lows to work with. And of course, not even remotely breaking any downtrend lines. Made new lows into the end of last week. Like I said, I think that was all about the derivatives expiry and what their plan was. Also, too, you know, FTX crap is now starting to come back into the news, so that's going to have definitely an effect on the marketplace. There was also 1 or 2 other fundamental things that jumped out at me. I just can't remember them off the top of my head. Also, too, I suppose we have that big Shanghai upgrade coming up, so I don't know when that date is specifically. I don't know whether that's on the table right now or not. But now we're at the point where if this actually is an ABCD trend continuation, we got a lot of upside resistance here. But more importantly for a guy like me, 66% is sort of the absolute limit that if this is a trend continuation move and I'm looking for a pop up top, I can't really see it go below 66. So we're kind of at the point where if this thing's going to be a bot, it's got to stop making lower lows. And it's got to start actually making higher highs. So that was sort of my big message this morning because of V-bottom. You know, what a great analogy. V-bottoms need to be tested. This one, it took a while. And then that one, it took a while. And then this one took a while. Then this one took a while. That's a V-bottom. You know, maybe if we're lucky, this turns into some sort of inverted head and shoulders. And the test of this low is some sort of, you know, a right shoulder over here. And then away we go. But at some point, this is going to have to be tested. So if we look at it on like a 4-hour chart, it's my funny Tesla chart, there is that funny inverted head and shoulders I was thinking about. So notice, remember our conversation about 38.2s. Notice if this does actually play out as an inverted head and shoulders, then the neckline of the head and shoulders is basically that 38.2 level. So that's up around 1625, 1630, somewhere up in that area. So to see them doing that now, actually not really too big of a surprise. So where are we now? We are 1634. All right, so there is that awkward, awkward is awkward, yuck. Actually, I really don't like this now, to be honest with you. This was the pattern that I was drawing earlier. But you notice, like, that's not really a symmetrical head and shoulders. I mean, you can definitely draw it out. I've noticed David, who's sort of our resident head and shoulders expert, he doesn't really like these kind of heads and shoulders. So I was sitting there in the lounge this morning and sort of humming and hawing about this. The fact that this rally petered there, when really I would have preferred it up there. What is this trying to imply? And sort of, I kind of did some thinking, and I, believe it or not, I actually like this as the head and shoulders. Something like that. That's a bit more symmetrical. And that would be to there. And really, that means that this head and shoulders actually broke out there, which is interesting. Not quite sure how to interpret that. I suppose if I'm drawing trend lines, I don't know whether I have this exactly accurate. I did that off of that high. I don't like that. I think I might even want to be something along those lines. That's a tough one. It's probably even, there's the market structure there, eh? Actually, I like that market structure there. Something like that. So, wow, what an interesting battle. So, is this a head and shoulders? God, that's a tough one. Theoretically, we should see a bull div on the head for the shoulder. I doubt we're going to see that. Oh, well, see, there's the div there off of that. But I know, and, the problem is I can't really quote him. But on Tuesday, I'll pick his brain. I know he likes to see like an atom, and then the actual head and shoulders is like what we call a Steve. So this is Adam, and this is Steve. Regardless, if this is the head and shoulders, then maybe I'm thinking something like there to there, and then clone that, and there to there, which takes us up into that horizontal support and resistance line. That's the original breakdown up there. It's not really the crispest of levels. It's sort of arbitrary. I guess I could make the argument if this is some big honking head and shoulders, then that's a neckline. So shoulder, head, but you notice we have momentum making a new low. So now I don't like that. So this is a tough one. I don't think that line's relevant. I do like this as a head and shoulders, but it's sloppier than slop. It's not setting up with trend lines. It's a bit subjective. But if we think reload zones from that low there back up to that high there, here we are coming into Collins dump chaser zone. Actually interesting. I just noticed this now. Look at that. This is stamp. There's actually a price gap right there. You don't see that every day. So if there was a technical objective, I think it would be right into that gap. How often do gaps get filled in? I think you guys know the answer to that. So head and shoulders objective up into these highs? Yes, maybe. If we do like a good old reload zones all the way up top, 78.6, 61.8. That takes us right up into the move stop to break even level off of this massive bot. I don't like this bot though. Ugh, that looks dangerous. Maybe this head and shoulders takes us up into, what is that, 1655 area, 1670 as Mountain Man. And then, interestingly enough, there is the original trend line fail level. So, believe it or not, this thing could actually move all the way up into this sort of 1680 area very comfortably. I don't know whether I really like that bot. That's something I probably couldn't take. I'd be too chicken. But anyway, so there's your Ethereum. Again, sort of dead cat bounce into resistance, especially this trend line, into reload short zones. I like that thinking. Also, too, we made lower lows here in price, but higher lows in MACD. This is now broken out. It's confirming. So, the rule is if you see a confirmed bullish momentum divergence, then if you are a bear, you have to cool your jets and just chill out. Chillax. So that's sort of what I'm seeing here. It's a chillaxing kind of moment in the market. Probably a little too early to sell and a little too early to strap on new shorts. I don't know. You would have to have the balls of steel to step in and buy that level down there. I actually like the idea that it's just sort of like... if you're thinking long, it's probably a little too early to get uber bullish. Kind of the same thing as Bitcoin. You know, that was just off a straight, like I love that candle body low for trade location. You know, sometime through tomorrow or maybe even Tuesday, London kill zone. I love that as a level going forward. I'll keep an eye out. Right here, there's just not a heck of a lot I can do. So that hopefully that gives you an idea of what I'm seeing in the crypto market here. Maybe if we put a 4-hour, you can see the same thing here. Interesting, you know, you see this massive double top. I have a general rule, you know, if this was the 50% level target, and actually we even saw this on, I think it was the stock market last week. But if we have 50% of the anticipated move actually traded to, then not a bad idea to move your stop to scratch, because you never really like to see a winning trade turn into a loser. So did we actually see that level hit yet? No. So I get the impression that this trade's just, this is a 4-hour trading the double top breakdown, targets 50% level of its entire range, bottom of megaphones, that kind of idea. This is just a dead cat bounce inside that pattern. That's all this is to me right now. And as I said a second ago, kind of like on Bitcoin, but you could probably see it on Ethereum as well. You know, once we get up into this area up top, what I'd love to see is, first off, let's get these bearish divergences resolved. This might take some time. That looks like a pretty good bull div. So this is going to take some time to play out. You're going to want to see a new M come in and price roll over here. And it's probably going to happen right up in this reload zone up top here, and probably against that original M top there. 1671, that kind of idea. So, higher time frames, kind of in the middle of a correction phase. No real buy signal here. I just think that the market went down far enough, you know, ran into things like Mountain Man levels off of things like Bitcoin, started to spit out bullish divergences. So I think at the best, bears, they better just cool their jets. In the face of all of that, what does the broader crypto market look like? This total market cap is not a bad proxy. Interesting, you can see more bullish divergences in momentum. So if you are a bear, you got to wait for that to play itself out. Interesting, if we go up to the daily charts, is this some sort of massive cup and handle pattern that's just working its way higher highs and higher lows? You know, the 4 hours we're starting to see a little bit of a bull div, not really enough to make any huge conclusions off of this daily chart. If anything, what this looks like to me is a big wedge. And I think I've told you often with these wedges, especially on MACD, you kind of get a scenario where you can see the energy is building. And we're compressing, right? We're compressing. What should happen here is ultimately you never know which way it goes, but I'm sure there is some sort of math to it. But you get some sort of huge breakout and then huge slam down the other side. And I suppose you could make the argument that's exactly what this is, right? So compression, and then huge breakout one way and then slam down the other side. So this happens a lot. That's what I would expect here. So, you know, if you're like, okay, well, you know, I'm hunting a trade. Well, let this compression play itself out. And, you know, you can see as soon as we W'd out here, that would be breaking this downtrend here. So 1, 2, 3. As soon as you get a breakout here, you can go, all right, hey, whatever's going to happen, now's the time it's going to happen. So you can see we got 1, 2, you know, do we have some sort of rally up into here and then pull back? And then if this is for real, get ready. You know, something like that, that wouldn't surprise me. So keep your eyes peeled for that. Conversely, it can happen going the other direction as well. But I have a funny feeling, especially with those bull divs and stuff, that we have to have some sort of resolution of this bull div to the upside. Like I said, off of the 4-hour. So some sort of bull div that, this div here's got to play itself out. Do we get a rally back up top here? Maybe. Tough to say. If you're going to play this, looks like it's a lower time frame play. So there's your trend line. The rule, of course, is we want to see a W on the other side of the trend line. So you've got your bull div. As we said, that's probably like your mountain man level down in there. We had a bear A, B, C, D. Now, can I please just get some nice market structure in here to actually frame my entry? Then it would just be something like, okay, I'm going to buy there. I'm going to risk to the bottom of the market structure. 2 to 1. Let's let part of the position go. Stop to scratch on remaining, and then just see where the market takes you. Actually, I don't hear a lot of people on the YouTube and stuff talking this way. I really like the idea that you don't have to sell all of your position. And if you're like one of these trader guys and you're trading for profit, make money from trading, can you please hit the like button, subscribe, ring my bell, all those fun things, right? Really find the W's, risk the entire size of the W, 2 to 1, force yourself to take some profits, move your stop to scratch, let the market do its thing. That other portion that you still have on, that's the portion that's going to make you a fortune in this game. And sometimes the market just goes absolutely bananas and you're like, wow, it's time to go buy Lambos. Okay, so hopefully that gives you an idea of what I'm seeing. Sort of Bitcoin, nice rally into resistance. I think that's perfectly realistic within the context of sort of a broader breakdown. Ethereum, same sort of thing. A little bit of a breakdown up top here, but bull divs maybe got a little too far, too fast. So counter trend rally back into resistance. Let's see how it acts. If you are thinking short and you'd like to sell, let's let this bear or bull div play itself out. But for the time being, it looks to me like we've got a bit of a trading range established. So yeah, it looks fine. Probably a great time. I actually wanted the market, the broader crypto market, to come down some more because I got a whole bunch of stuff I'd love to buy, but still a lot of green on the screen here. There was one that was coming down recently that I was like, hey, you know what? I may actually do some buying here. It was a good example. I thought it was right down at the bottom here. Is it this one? Not really, but where's Brian going to be trying buying against these lows? So it's started to work its way down. Can we have like another leg that comes down, something like that? Finish this pattern out, then Brian can start thinking about buying. There's tons of names that look like this. I don't really like the idea of buying this guy way up top here. I mean, it might turn into a bot. Ideally, I'd love if we could to get the market, again, A, B, then clone that, C, D, a nice little dump down into 78.6s. Oh, I'd love that. I'd be all over that thing. But I got to wait for it. And right now, I think this is a good example. You could easily see this thing just staying within the context of this recent consolidation. You could easily see this thing move up even from here, right? We could still move up 10%, no problem. And all we're doing is just testing the highs end of the range here. That's it. I did see a lot of people getting all excited about this audio. Another good example. Where I can't come in and buy that. Love to, but I can't. If anything, probably there's a bullish bot working on this thing. So there to there. And then, boom, 33.66. There to there. And then there to... there. There's your sort of bottom. You would have a beautiful little W right there, right? Perfect. Right off that level there. Oh my goodness, how textbook. But I can't really do anything there. I'd love to buy some of this. This seems to be a pretty popular name in the space these days. There's Sjord's name, that Rand. Same sort of thing. How can I come in and buy that M staring me right in the face there? I just can't do it. I'm not allowed to. It's against the rules. Thank you, Eddie. Appreciate the donation. You're a sweetheart. So something like 33.66. Okay, maybe. If we can come up here, maybe put in like some higher lows here. I suppose I could bot this out. I really don't want to. I hate chasing, but you never know what the hell in this crazy game. So let's see. There you go. So can I get some sort of bottom to come in here? Maybe. But this is going to take a lot of work. I mean, really, my rule is I don't really want to take a trade in the face of that trend line, like buy here, with that staring me in the face. I hate doing that. So, I mean, really, ideally, where I want to be a shopper is I want to, because remember, I shop at Kmart, right? I'm cheap ass. So I want to be buying at like 78 cents down here. That's where I want to be buying. So I can't really do anything on that. I showed you the sushi before. The really slick traders along off that double bottom. I bought the weekly W, I think this one back here forever ago. But can I do anything right there? No. And I suppose if this thing does still want to be a bull, then, bot her out. Bot her? I don't know if that's a word or not. Boom. 33, no more than 66. Clone that. Up we go. Bot trade levels. So, we've got one low. 2 lows. Could I get a nice W in here to form? Maybe. That would actually be attractive. Can I get a break of this trend line here? Actually, I guess I do. Well, actually, that's a higher high there, isn't it? So actually, that's what it looks like. This is kind of a weird one because then what that means is that that's also a trend line too. Could be trapped in that range for quite a while. Yeah, I mean, really, I don't like the look of these. I would rather, same thing I said before. If I wasn't in this, I'm already in it, so it's not really that big of a deal. But notice how that reload zone lines up with that killer trader low down in there. That's where I'd like to be long. Anyway. I think I told you about this get. Now, this is an interesting chart because, it has key reversals working. It has a funny bottom. If anything, the key reversals look like, I guess, not really the best example. But, something like that. 33.66. Do we get bot levels? Something like that. And like that. This might have already hit objectives, so it's getting close. Anyway, interesting. You can see all the bottoms off of that 25 level. So that guy's probably approaching sort of the end of whatever the move here is, and this was a lower low. So if anything, what you want to do on something like this is ask, is this low on a divergence? No, I mean it is, but it's not really that pretty, is it? I would expect, once this rally is done for it to come back down. Actually, wow, what a good analogy of gaps, eh? So you can see this guy wants to come up, fill in the gap up there, and then roll back over. And then probably on the gap fill, let's say it does hit the bot level, then back down we go. And you can do reload zones going the other way. So down in this area is probably where you want to be shopping. So probably that big, government hearing on how horrible Ticketmaster is and how it's a monopoly and how all the teenage girls are dying 1,000 deaths because they missed their Taylor Swift concerts and all that stuff. Is this some sort of, maybe it's all the way up there. Could be. Keep in mind the ABCD, this is kind of a fun little sort of added alpha for you. Sometimes ABCDs can be what they call alt ABCDs. which means that they can go as high as 127s and 1.618s. And notice, look how that 1.618 lines up with that high so nicely. So maybe what this is whoops, shoulder, neckline, head, neckline, shoulder, and away we go. Which would mean that we probably want to draw the whatever the highest high is here. Ideally, I would like that head and shoulders to be symmetrical. I don't know where the top is here, but we get that alt ABCD maybe. Then pull back against the lows, and if this is a real inverted head and shoulders, we won't go through this shoulder, and notice how that's 88.6, and notice how it's right off the original bottom there. So nice little pullback down into this area, and I think that would be just the killerest killer buy you've ever seen. So I'll keep that on the radar screen going forward. Little names like this lit. I can't really be a buyer of this thing here. It's good looking charts, and I think I even put tweets out if I was going to teach a course on trading. I'd want you to look at something like this, but you can't really buy that. If anything, what I would expect is, reload zones. Hopefully after a while you go, geez, this guy, all he does is he says the same thing over and over and over again. But you can see where reload zones are down here. You can see the original market structure bottoms. So that's where I'd want to sort of buy if I wasn't in. I'm already in this thing, so I don't really care. But if I wanted to buy or add more, I love this 80-cent level. But $1.28? No, I can't touch it. And the list just goes on and on and on. It's the same thing over and over. Don't like the look of some of these names that are sort of trying to paint higher highs, but you can see momentum is kind of flagging or floundering. You can also see the buying pressure from volume. It's kind of waning here. Willie did officially get stupidly overbought and is waning. And again, do I come in on the buy side up here? Not if I like money. So you can see where the reload zones are. That's where I'd want to be hunting. Somebody asked over there in the YouTube page, BALUSDT. It's probably the same logic. This one, I really don't like to see these shooting stars like this. This screams market manipulation. It also screams illiquid market. So it looks like to me what ends up happening here is, the order book gets awfully thin. Notice if we get up into this area, this is pretty much the previous market structure fail level there, that low. Right, plus that low there. So what I see happen here, market dumps, puts in a bottom, and then we spike up into these because everybody sort of, falls asleep. All the sell orders get liquidated. Not liquidated, a lot of them probably just people gave up and said, oh, fuck it, I'm not going to sell where I'm supposed to sell, just sell it now. Order book gets awfully thin. This would actually be probably a really good lesson in studying the order book. So if anybody really wants to have some fun with that, it would be tough to do because, of course, getting old order book data is very difficult. But my hunch is the offer side of the book really started to thin out here, especially when they took out this high, and it created almost like a vacuum. You probably also had a situation, notice that this was a breakout level. You probably had some fat cat, and it was probably some assistant or something that really didn't know what they were doing. And the fat cat says, okay, just go buy me like 10,000 of this thing. So they just place a market order, and the market just goes and cleans out the order book on the other side. Once the order's done, there's no more buying, and the market just falls right back into support. So it looks like they've done that a couple times. Try not to chase and don't be the idiot buying up here. But, I suppose if you zoom out, what do you think the odds are we're coming up against previous lows? I bet you're probably pretty good if we go USD. Actually, this is an interesting one. So this is technically pretty darn cheap. I suppose you could also argue too. Remember, I had said earlier that these lows were key support and resistance. That's probably also the same thing there too. So cheap. I would definitely call this thing cheap. One thing, actually, I had one student years ago, and this is just personal experience because I've been playing this game forever. OBV divergences are huge. They're so powerful. So something clearly is going on underneath the surface here. A lot of this, unfortunately, is, the kids FOMOing, buying. They don't realize, a lot of the people that come into crypto up top here, they don't even look at price charts, so they wouldn't even know. It would be like, wow, in fact, the way that 90% of the market participates, which is kind of tragic, but it is the way that it is that this is probably the extent of their analysis. And they go, who's a really good example of this? And I don't even know what happened to the guy. It'd be interesting to find out what happened to the guy. But this guy, he was around for years and years ago. I mean, this is, I think, probably, almost 10 years old now. Fristikin. Do you want to trade some shit coins? Open up that wallet now and send yours away. And I remember we had a German guy who was a tattoo artist. And I thought for sure this guy would be the next generation's this guy. Do you want to trade some shit coins? Doesn't have to be with Bitcoins. But anyway, you see? Almost 1%. 1% all. Well, Litecoin down 4%. So just like what he's doing, most people, when they want to play crypto, this is basic. Oh, hey, Uniswap is up to 0.1%. Oh, in the past 24 hours, Tone Coin was up 3.1%. Oh, that must be a buy. And I mean, look at that chart. That's a bullish chart. Look at all the W's, right? Okay. So, believe it or not, that's actually the extent of what the public does as analysis. Believe it or not. I know it sounds crazy, but it's true. So, looking at this and seeing the price make higher highs and higher lows, of course, all TRIers, we'd be like, oh, you're crazy buying up here. But, the public doesn't know what the hell they're doing. Especially, I'm hearing a lot of people say, oh, go on this site called TradingView. So that means that they've never even been on TradingView. Oh, boy, that's scary. Anyway, so from that perspective, are we buying an expensive idea or are we buying a cheap idea? I'd say you're actually buying kind of a cheap idea. See if we can get any more history on this thing. It's kind of hoping. I mean, I don't know what Gemini is. Let's see. Is this thing any more data? There you go. There's a little bit more data. So clearly this is a very, very important level. I really don't mind. This is a good example of... I don't know whether this thing is a technical buy just yet. I always like the whole weekly W's. So can you see the weekly W's trying to form? Down, up, down, up, almost, down. Oh, here we go again. It's trying to make these weekly W's. You might even argue down, up, down. Did that break to new lows? What's that number? That's 456, and that number is 459. Oh, there may be W's in here. So also too, as sort of a litmus test of trend, I always like to ask, what's the 13-period exponential moving average on the weekly basis versus the 30-period simple moving average? Has that turned? Oh, hello. You can see it looks like it turned up right in here. So you're not buying, you're not chasing. And believe it or not, half of the battle in this game is just to stop people from chasing. And I hate to say it, here's a great example. You can see the original W in this particular case only took 2 weeks, eh? Boom, 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 away you go. Don't chase. You're not allowed to buy up here. And look how they brought the market right back down against those lows. And then here comes a W. And then a little fast little W. Moving averages turned up, and there's your buy signal right in there. Right? And you can even do things like trend lines, right? Can I have a W on the other side of the trend line? That's all over here. Can I get any kind of bullish structure on the other side of this trend line? Away you go. So you're not chasing, so score 1 for the good guys on that. Good job. Dudes are trying to form weekly W's. Not bad. OBV looks sexier than sex. That alone would actually almost want me to go and buy some now. Let's see what this thing looks like over on our funny little... It's not bad. Interesting how this one is painting 3 lower highs. I don't like that. So if you are trading this on Binance, be cognizant. If we get a green bar on a weekly basis that's less than the lowest green bar that you see between these 2 highs, then it means the bulls have officially fallen asleep. So the lowest bar is that one there is 677. That one there is 700. This one's 647. So it looks like 647. This bar right here. Watch if we get an up bar, green, that's lower than that one right there, then you'll get 1, 2, 3 lower highs. M confirmed. Bulls have officially fallen asleep. And to bust out all this, show me a nice big fat green bar that's through this high, and ideally through this high, and then we know, oh boy, this thing's off to the races. But probably your trade, notice, I mean, this one didn't really work out that well. But notice, you know, we had lower bars, and then all of a sudden the green bars started to perk up here. That's what painted this rally. It's not a bad idea, you know, it really isn't. If you're patient and disciplined, you know, let's assume that these W's hold. So then we can go off of whatever this lowest low is back up to that high, and you can start doing things like chaos theory. Then you can also do things like, well, this is the lowest low, this is the high, so let's start doing some retracements. Actually, let's do them all. There we go. Notice 4.669 lines up nicely with the 50% rule, which lines up pretty nicely with that high right there. So believe it or not, looking for 35 bucks down the road, not unrealistic in my eyes. So I don't think you have really that bad of an idea here, you know, honestly. So good on you. There is the ball. In fact, what I would say, you know, just as I was saying to you guys earlier, I don't like to chase. So what I would prefer to do, this candle wick, you know, again, is this a fat finger? You know, maybe we just don't include that. I do like to use like sort of candle bodies for reference. So even if we just go here, back, I don't know, I guess we can go down to there. But actually, there's the lowest low all the way down there. That would be better all there. Where's your reload zone? Notice the reload zone, interestingly enough, if we did a horizontal support and resistance, there's 78.6, there's 459. So is $7 a little bit expensive for this thing? Yeah, maybe. And if you want to maybe, if you're like, well, Brian, I really like the fundamentals of this story. I think they, you know, I like the guys who are operating this story. The directors are totally trustworthy. Okay, put yourself on maybe a dollar cost averaging plan. maybe throw in a bid off of 38.2s and the 200 SMA. And if this is some sort of head and shoulders, you know, before the big blast off, well, you got a nice fill on the 38.2. You know, as I said before, and what I'd probably do following the end of this video is just throw in a bid at that 447, 78.6, looking for a stab, kind of like the way you see these stabs up top sort of randomly happen. I like a stab against these lows. See if you can buy some cheap coins down against the bottom end of the range. Notice that this W, this original W level right there, is basically that 38.2. So kind of like the chain link, the sushi. You saw how those trades have basically not really done a hell of a lot, but this is basically a bottoming level. That's another sort of justification to work that initial bid at that 38.2 level. So see if you can get some there, and I might even do this when we're done this video. What I would say here is LOL Nanny Nibble subject average around $15. So that must have been when we bought probably against these previous lows there. So as long as I haven't broken that 5% rule, I could go in and throw in a couple more bids here to bring that average price down. Nothing wrong with that. All right, there you go. I bet you weren't expecting all that, eh? Who asked about that? David BRTE. There you go, David BRTE. Hopefully you got your money's worth. Andre is asking for Ides of March to be a big dump. That would make sense. GLMR. What the hell is that? GLMR. Crypto? You into the cryptos? Crypto. Tastes great. Interesting. If we start at the weeklies. Not a lot of data on this. Interesting how we basically, you know, all of this fluff, they basically brought the market right back down to this original low. What is that low? 25 cents, 2 bits. Shave and a haircut, 2 bits. And the high of the candle was $51. Oh, God. That's like 100x from when they opened it. No, 200x. 200 freaking x on one candle. That's crazy. So that's you know, that's crypto. That's Binance for you. Is this? Am I looking at the right coin here? The right asset? Robel. Let's see if we can find just one of these sort of manufactured markets. Oh, nope, nothing there. Sometimes when you look at these versus USD on other exchanges, you actually, yeah, like let's see this one. Yeah, same thing. Is this thing a relatively new idea? Tethered Standard Futures. What the hell is that? Jesus. GLMRUSDT spot. Whoa, versus Tether on KuCoin. Of course, KuCoin is the gambling hub, right? What's that number? Again, 25 cents. So at least you're coming in at where the bottom of this Ponzi is. Again, don't chase. Try and buy against the bottom ends of ranges, all that kind of crazy talk. Ironically enough, that was probably value, whatever the hell that low is. So, in the short term, do we have a bottom here? That's an interesting low. What is that? 31.46, 31.28, 31.30, 31.84. So they went after the stops, cleaned them out. Oh, and actually you can see the lowest low is actually right there. So perfect stop run move. You know what I've said before, V bottoms are very rarely sustainable. So kind of like here, this was a V bottom. We rallied up, maybe a little bit of a double bottom, but rallied up. The guys who put this bottom in here, they probably were taking profits on that move. Come right back down, liquidity hunt. I mean, I have no idea what the hell this thing does. So it was probably just a classic liquidity hunt play. took out the lows, closed it at a lower low, then started the pump the other direction. Cleaned out the liquidity on this high, cleaned out the liquidity on this high. So liquidity guys are having a great old time here. Do you really have any signs of a weekly W yet? It looks a bit sketchy. So got that. Moving averages still pointing down. So I think the bottoming process is still underway. Probably, this is a new closing low. It's also a doji. Keep in mind, doji means indecision. So it looks to me like they were kind of indecisive here on this lowest low. Dead cat bounce, basically ran out of sellers. Dead cat bounce, went after liquidity pools to the upside. Really, I wouldn't have a problem. Actually, a really good sort of, conservative approach would just be to simply throw in a stink bid at or below reload zones and see if you can pick up some cheap coin. Notice here, I thought this is interesting. Look how there's a price gap right there. Do you think that's an accident? I always tell people, how many reasons should you have to justify taking a trade? I don't know whether you know the answer to that or not, but it's pretty straightforward. You can make the argument, and this is the venture cap reload zone. So that's 78.6 to 88.6. I get the impression Glimmer Tether, I don't know what the fuck this thing is, but it's probably venture cap out the butt. So now we've got venture cap reload zones, gaps, and notice this is the original market structure bottom. Right? It went down, up, down, tested the lows, turned around. So you could argue that's the double bottom level right there. So that's not a bad trade location, somewhere around 34 to 35 cents. And actually, we used to have a setup on this site, I think we still have it in the library, where it just simply says identify previous market structure bottom, let the market rally away from that market structure bottom, work your stink bid at or below 78.6. You want to throw in gap, even better. And look for a stink bid fill right down in here on some sort of panic dump. That's we like to call that the shark setup. Gotta tell you, it's pretty effective stuff. So, no guarantees from the management, but that if I was interested in buying this, I think that would be my initial sort of thought, because this does not have a weekly bottom working yet. Weekly trend still pointing down. So want to do some nanny nibbling against the bottom end of the range, hoping that we do actually start forming higher lows and higher highs. I'd start working some bids down in that area. All right. Somebody wants me to look at Golden Burke says GLMR was some kind of airdrop for DOT auction on Binance. Okay, so there you go. Brian, can you look into XPRT? What time is it? It's 12:38. I actually see the temperature and it's above freezing now, so I'm a little pissed off. But we were supposed to have Snowmageddon here in Vancouver today. So of course, if anything, this weather that you see right now, they literally, the media programmed us, and I don't know whether I can show you this or not, but the media programmed us, and there's all these stupid, idiot, fucking climate dickheads. Have you ever heard the goddamn fucking weatherman ever get the weather right? Come on. And it's so frustrating. So, we're supposed to now listen to these climate people that are saying, oh, the Earth's going to go up this much temperature. Theoretically, if you listen to these climate dickheads from back in when Al Gore was going around in 2001, 2002, it would be fucking 70 degrees Celsius right now, which is such a load of horse shit, eh? So anyway, they completely got it wrong. They were saying that it was supposed to be minus 7 degrees here today, and we were supposed to be buried in a foot of snow. There's a bit of snow out there, but at 3 degrees, I really should be out there with Liam today. So now I feel like a total heel. Because the weatherman told me about fucking global warming and how we're supposed to be freezing today and buried in snowmageddon, and it turns out it's all bullshit. So anyway, point of the matter here is I don't have a deadline here, so I'll just talk until I'm done talking. And of course, Josh goes, "No, don't do that. We're only supposed to talk for an hour and a half." Anyway, hey, look at that. Now at $500. Okay, so what were you guys asking me about? XPRT and NEO. Jesus, holy moly. I'll try and go through this as best as I can. Where was the... I guess I was doing this chart, eh? All right. XPRT. Not a lot to choose from here. XPRT. XPRT. Yeah. Well, we'll go off of KuCoin. Seems to be the popular place to trade these days. Yeah, there's nothing there for me to get excited about. New low. Nice W down there. What do you think the odds are? This was both a fog and bomb. So let's see. Did we get a fog and bomb level? Boom. Oh, look at that. 4.669 right on the nose. Well, now if you adjust it, it's gone. Okay. Of course, fog and bombs on all this stuff. Highly subjective. Actually, I kind of think the W is there, you know. There. Because it looks like those lows are high, right? So there. Yeah, it does explain 4669 there. I'm kind of thinking that this looks like a Colin dump chaser zone. So there, up to there. And we'll do our reload zones. And boom, 38.2 to 50%. So this to me looks nothing more than what we call a dead cat bounce. So she bounced right into resistance. You should expect 38.2s at any given point in time. Mr. Gann, WD Gann, 50% retracement. Rolls over, comes back down. I suppose you could probably do a fog and bomb going this direction now, there to there. Where are we here? Boom. 2.618, nailed. Then we did a fog and bomb going the other way. So fog and bombs for everybody. Interesting. So we probably should get our way back up into there. Maybe like A, B, C, D up into here. This is a new low. So on a weekly basis, this thing's probably still trending lower. Yeah, I mean, cheap, yeah. Still trending lower. You know, give me that big W, put in a big W through here, blast up through here. Then, okay, maybe we got something to work with. But for the time being, still consolidating. Should we break through this high here, then I think we can head up into there. So, $1.34. You want to take a shot here at 58 cents. That's about double. It's not that great of a number, but that is an inside bar off a weekly basis, so it'd be a bit aggressive. Maybe you buy there, risk to a break to new lows, which means you're going to risk about 20-30%, kind of like we call this a Joe six-pack risk, 25%. And then, like we said, if you do get the turn and it rallies up into things like 2.618, 63%, what I would simply say is if you did buy that, I would try and shoot to get that double. But double, that is quite a stretch. So I don't know. That might be asking a bit much. You could draw projections. So it looks like boom, boom, 4.669. Yeah, it looks like we could get up into that area. It would be very aggressive. There's no signs of any W here yet. It would just be like, well, you know, same sort of thing I said before with other names. I know the fundamentals. I know that there's value here. I can't answer that for you. You know, there's a lot of guys, you know, like Paul, who's like, fundamentals? I don't know what fundamentals are. I just trade charts. Do we actually have a bullish setup here yet? No. So it would be really aggressive to come in here now. I think probably, conservative. I don't know the fundamentals. I don't know the insiders. I don't know what the story is. Let this W come in, then on pullbacks, hunt entries. But, I could see at some point down the road, especially through the summer, them do something along those lines. And then also, too, you probably start drawing fibs going back the other way. You can always like nanny, nibble, little old lady, this kind of thing. Don't take too much risk, right? There's 38.2s all the way up there, $1.90. So if and when this thing does get its act together, it's got a long way to come back. So that's what I would say with that one. I'm going to have to cut it off at that, guys, because we do have the primary focus of these Sunday shows is actually to speak to the current level 1 students. So I do know that they had about 3 or 4 questions, and I'm kind of running out of time here. I can't believe how long I talk. So we gave you a pretty good idea of what Bitcoin is doing, and it looks like it's just doing exactly what it's supposed to do. Dead cat bounces into call-in dump chaser zones. Makes perfect sense. And same thing with Ethereum. I don't think this is a head and shoulders now. It'd have to be something like that now. So I think that's off the table. Was this a little itty bitty head and shoulders that's painting this objective now? Yeah, I think so. Counter trend rallies into resistance might set up new shorting windows, possibly. Right now, if you are thinking short, thinking down, you got to let this bull div, beg your pardon, play itself out and just cool your jets. And then we gave you a whole bunch of little names, things like Sushi just treading water, Link just treading water. Didn't look at this Matic, but holy crap, has this thing ever moved up? I sold a bunch up top here, as you can see, and I'll be more than happy to buy this thing back. But can't chase, and I certainly don't want to pay those kind of prices. So, where's stop, right? I'm just going to keep dragging my reload zones higher, and you can see where I can buy. So I just got to be patient. Did look at a bunch of your names. So I hope you got some value out of looking at a few of those names. And now let's head on over and look at those questions. Now, where the hell is that document? Oh, goodness. It's around here somewhere. That one? Hey, there we go. Okay, on to the questions, and if maybe you can make like a chapter reference here, Chris. Brian spent maybe like a chapter of Bitcoin and ETH analysis. Then we quickly looked at the total market cap. Then we looked at a few altcoins, and now this chapter reference looking at some level 1 student questions. Does that sound doable? I think I heard him say something. Hey, there he is. All right. Okay, so everybody please understand. People are asking me questions, so I'm going to give you my candid answer. It might not be politically correct. It might be a little bit hot-headed. But Brian's an open book, so don't be offended. And if you're not really interested in listening to my opinion, because half of the time all this is just my opinion, then I don't have a problem. Have a great afternoon. PMA for the win. All the best. So here we go. Number 1. Hi, Brian. In the recent BITO put options expiry, you mentioned that Wall Street manipulated the market and managed to walk away, pocketing all that put option premiums below 15 strike. What mechanisms do they use to manipulate the price of the asset? They just buy it. They could buy the BITO. They could buy Bitcoin itself. But they just buy it. Outright market purchases of the asset itself. Yep. They could do both. Keep in mind, there's a bunch of Bitcoin ETF sort of proxies out there now, like in Canada. And I wouldn't be surprised. I honestly think that the Rothschilds, the European, even, to an extent, the Americans, because I think the Americans are now basically the Rothschilds' bitches. But, are they wrapped up in JP Morgan's, in Chase Bank, whatever the hell Chase is called these days, Goldman Sachs, Bank America, Wells Fargo. I actually think they use the Canadian market a lot to manipulate things and get around the SEC down in the States. So there's been a couple Bitcoin ETFs. This QBTC.U is a Bitcoin ETF that's in Toronto. And then there's this junior one, BTCC.B in Canada. They could do a lot of their operations through these things. They are both Bitcoin proxies. Hell, I wouldn't even be surprised if they're in there screwing around with the Sailors issue. They could do it a lot through things like Riot and Mara. They could, and I think a lot of the institutional players got caught in this Silvergate. And interestingly enough, of course, when you talk to anybody in crypto now about Silvergate, it's like considered a pariah. But the irony of it all is I actually think that, institutional players, keep in mind, Caitlin Long is still lobbying like crazy to have Bitcoin basically become legal tender in the state of Wyoming. And I heard that the state of Wyoming recently passed legislation that basically guaranteed the rights of Bitcoin miners in that state. So Bitcoin ain't going anywhere. And if Caitlin gets her wish, she's going to have a Bitcoin bank. And that's basically what this thing is. And I hate to say it, folks. I mean, how many times have I told you about shitcoins and buying against the bottom ends of ranges? Well, this is basically a shitcoin in the banking industry. And, here, ironically enough, here's your venture cap buying zone. And it's even below the venture cap buying zone. Is that not technically a buy in the stock market? I think it is. Is it Montana? I don't think it's Montana. I think it's Wyoming, Joshua. But anyway, that's here nor there. We can debate that on the site. So, I might make the argument that, if you are a stock investor, holy crap, you got to go pick some of this up down here. It's dirt cheap. So, good example of buying when they're crying, selling when they're yelling. You can do the same logic, whether it be something like a Bitcoin-related stock or a Bitcoin ETF. Same logic, right down at the bottom end of his range. Or Bitcoin itself and all. I mean, look at these gaps. What did we say about gaps? Something about gaps? Something about gaps? 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 Joshua and his gaps? So, yeah, so the question specifically is, I guess, how did they do this? And, I mean, they could have used any number of vehicles. Yeah. Yes on this front. Yes on this front. The options, they could. I mean, you could make the argument that, and probably you need to see the data yourself. I mean, it was staggering, the data. Absolutely staggering. Look at all these silly options. And then what's fascinating is above $15, they just disappear. I mean, that's ridiculous. And oh, gee whiz, the stock goes out at like 15.05, 15.10. I mean, that's insane. So, they might have even written some like $15, $14, $13 puts and then gone and bought the stock. Or even, you could even, because if you write the put, then that means that you're saying I will absolutely guarantee to buy the stock. Well, you can see what some of these prices are. So, and keep in mind, this is when the market was up at $15. But when the market was at $13, these options were a buck or two. So you could have gone and written at, say, and you can't really see it after the fact because these options have expired. But if you pulled up these charts when it was live, you can see roughly what the average right price of these things are. But if it was like this $13 was a buck and they went and wrote a whole bunch of puts at $13 and collected $1, then that means if they're forced to buy the stock, technically their purchase price is $12. So, could they just write when the premiums were really high, which means they absolutely had to buy if the market got down low down here. And we always talk about where's the heaviest open interest. That's the anchor in the market. So technically looking at this data, you notice that the heaviest open interest is up here at $11, 8,600. That's the anchor. So what they're really saying here is this is where Wall Street is more than happy to do all the buying that if you really want to force their hand. And that, of course, was when Bitcoin was down here. So you can see based on this that if the heaviest open interest is $11, and this is where they absolutely will buy for sure, they might write this option and then go and buy this option. Of course, that's a spread trade. Point here is, just simply put, they closed the market out just above this 15 level. I mean, talk about blatant, absolutely, almost criminal, really, what they did here. Stunning, absolutely stunning. So did they just set aside a whole bunch of cash in order to pump the price above 15? Yep, could have. Near expiry, perhaps even using option premium collected. Absolutely. Yep, you're spot on. Yep, they could have done all of this. The key was they had to have the market above $15 on expiration day, which they did. All right, number 2, since coming to TRI, one topic I kept on hearing about but never quite fully understood is liquidity pools. Well, I actually think that there was one that just happened there on Bitcoin. So if we pull up the Bitcoin chart, boom. So as the market's working its way lower, and actually I think this is this chart, I had them all lined out on this. Yeah. So remember, let's see, how do we do this? There's so much crap on here. Sorry, guys. Let's just delete. We don't really need this part of the chart anyway. So as the market's moving lower, right, and we think market structure, Brian says every time you see an M, you want to sell the middle part of the M right here. And you're going to place your stop loss order right here, just above this high. Why? Because this level here represents a level where demand was really strong, but then it ran into supply, and there was so much supply offered that it turned the market around and it started to head back down. That's exactly what this is. Market ran up. There was so much supply. Like here, market ran up. There was supply here. Oops. Supply here. Market ran into that level. Turns out there's still supply there. So market ran into supply there, then backed away. Market went up, busted through this level. There's so much demand that it overwhelmed that supply. It did that, probably going after that liquidity pool because there's a bunch of stop loss orders. Notice that M. So Beamish followers sold that double top there and put their stop loss just above there, and boom, they were stopped out by the market. Thanks, Mr. Market, jerk. So there's a good example of that liquidity pool. Notice this M up, down, up, fail. Beamish guy tells you to sell. Put your stop loss order. So you shorted right here. I am short right there. If the market keeps going up and I'm still short, then I could go bankrupt. Because at some point, I'm going to have to buy the position back and give the asset that I borrowed in the marketplace back to the person who lent it to me to begin with. So I better have a stop loss order that if the market, remember, I'm short. If the market moves up, I want to cut my losses. And I want to say, look, I was wrong. Get me out of here. So that's what stop loss orders are. So on this M, actually we can use that M. On this M, your stop loss order is just above that level. So notice they took the market up, up, up into those stop loss orders. Cha-ching, cha-ching, cha-ching. The stop loss orders, remember this guy is short right there. So that means that this is a buy order right here as a stop. Buy on stop. That's what it's called. It's a liquidity pool. There's a whole bunch of buy orders sitting there. They take the market up, trip up those buy on stop orders, and then notice once those orders were filled, there was no more buying, and the market just melted back down. And then they did it again. There was probably somebody, there's no M here, but I wouldn't be surprised if some people were saying, okay, that is the top. I'm going to sell this fractal, this 3-bar fractal. Boom, boom, boom. So I'm short again here. And my buy on stop order is just above here. So that this is a liquidity pool. Market gets taken up into that level. And ching, 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 ching. All those buy on stop orders are filled. And then the market pauses. And then they did it again. Well, let's take it up one more time. Just to make darn sure. Anybody who thought this was a top, let's make darn sure that they have been stopped out and they have no interest. They have no more money left. They're broke. So they did it again. And then notice this time, down she goes. So hopefully that's a good demonstration. This is a liquidity pool. This is a liquidity pool. And ironically enough, even that's a liquidity pool. Then once the market gets going in earnest on the downside, well, now all of these levels become liquidity pools. Because now, well, that Beamish guy says buy W's. So down, up, down, breakout. I'm going to buy this level. Now, instead of the shorts, now I am long. My stop loss, Beamish says, keep it down here. Now, the original bottom, it looks like that was solid. But notice the market keeps making higher highs and higher lows, and not everybody buys the original bottom. In fact, some people come late to the party, which happens. I mean, it's just capitalism. And have you ever heard of anybody in crypto buying the top of the market? I mean, you know how that goes. So you could argue down, up, down. That Beamish guy says buy W, so I'm going to buy that level right there. And I'm going to have my stop loss order since this was a buy. This stop loss is now a sell on stop. So remember we had the shorter. These were buy on stops against these lows. This now is a sell on stop, and ding, 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 ding. Take it through that low. All of these sell on stop orders all get filled. i.e. it's a liquidity pool. And they just keep doing it both ways. Look at it. They went after this low. That's a liquidity pool. Why? Because somebody said, well, you know, that Beamish guy says buy W, so I bought that W right there. And I'm going to, well, maybe not this one. Let's go back. We'll go there to there to there to there, right? And that broke out there. I'm bought. My stop loss order is down here. It is a sell on stop. So you notice all the way over here, and look at this, they even brought it right down against that level, put a nice little inside bar here. So I bet there are a lot of technicians that looked at this and said, oh my God, buy that. That's totally a floor. Wicks and tails like to be eaten. Candle body lows for trade location, inside bar reversal. I mean, it just goes to show that no matter how pretty your technical setup is, they only work about 60 to 70% of the time, even at best of times. You know, some guys go on absolute winning streaks and they're just monsters. But I've found over time, you know, you'll go on through like a 70, 80, 90% win streak. Then you have to go through a 30, 40, 50% losing streak, which is a pain in the ass to work your way through, but it does happen. So here's a good example where, gee whiz, that looked like a really good level, but boom, they ran everybody's stops, sell on stops. This is like a double liquidity pool because you got these sell on stop orders as well. And sure enough, boom, big payday. All of these people all got flushed out. So hence another liquidity pool. So hopefully I've given you an example of both bullish and bearish liquidity pools, and that helps you understand. Let's see. Okay, would you please walk through the incentives involved for both the sellers and buyers? Hopefully I just did that, and the actual mechanism used by the institutions. Hopefully I showed you that. So I understand exactly what takes place. Francis, I hope you got a good explanation there. Hey everybody, hope all is well. Is SPY good for short? Well, there's a put my neck into that news. Remember I told you, even the best of setups, usually, you know, the absolute best of setups usually work about 60 to 70% of the time. That's what you actually have to shoot for, which means if you want to live this life as a trader, you have to be able to handle being wrong. Most people just can't do it. They can't handle that kind of percentage life. And that's why 95% of this world can't do this job of trading. It's a pain in the butt, but it's brutal reality. And then, of course, that's why most people lose at this game eventually, is they get sucked into bull markets where they see setups just keep working over and over and over. And then all of a sudden the market state changes and the market moves the other direction and they just can't handle getting stopped out. They keep coming back trying to do the same thing over and over and over, but they don't understand that the market state itself has changed. It's a shame, but that's the way the capitalist process works. Okay, what was the question again? I got distracted there, sorry. Oh yeah, SPY. I think SPY was a good short. This was the trade, and whether it be SPY or whether it be the futures, this is off of the S&P 500 futures contract, the March daily chart. I think you can see where the double top breakdown was. We had lots and lots of M's all over the place. We had Willie Stupid. 50% retracement. WD Gann was greater than a 2-to-1 risk reward, which basically implied that this is what we call an L-Tangonator setup on the site. And it's just one of the first setups I ever learned to trade forever ago. So are you asking, is it a good idea to come in and short the SPY here? And the answer is an unequivocal no. In fact, this short trade, you should move your stop to scratch and maybe even take some partial profits on that short. But at the very least, move your stop to scratch and just live with the results. Holy shit. Well, thank you, Adam. Adam's feeling generous today. Wow, there's a donation. Thank you, sir. Appreciate it, Mr. Oliveria de Hospital. Hey, he's making you look foolish, Eddie. Damn. Thank you, Adam. Oh, wow. I guess Adam just made a bucket load of money on something. He's probably long that Filecoin, and he made a fortune on Filecoin. Ah, pissed me off. I can't believe I let that one slip through my fingers. In fact, I think I even had it on the screen here, didn't I? Oh, no, I guess not. I did previously. Oh, so frustrating. Anyway, way to go, Adam. You bastard. Anyway, so the point here is, are you asking if ES is a good short here? No, this is a horrible short here. And kind of like what I was just blabbering away about Bitcoin and how you probably don't want to short it here because what the hell? That was a Mountain Man level that was just tagged. You don't want to short there. So if you want to short, I think, same sort of thing. Stock market, Bitcoin, they're all moving in unison. You can see where the shorting level is, right? 61.8 to 78.6. SPY, it's the same logic, just different pile. Same poop, different pile. So you can see where the top is. There's the double top breakdown. Beautiful breakdown. But do you want to short here? Oh, goodness. Oh, thank you, Adam. You're fucking awesome. Way to go, dude. Do you want to short here? No. No, 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 no. That is not the place to short. And in fact, probably the way that crypto is acting, keep in mind, crypto, I think, is actually a very good leading indicator. It probably means that the stock market's actually going to gap higher here in about 3 or 4 hours. That would not surprise me at all. So, I hope that answers your question. But unequivocally, no, that's a terrible place to short. I am looking at a 13 EMA, 30 SMA, Brian's bias on a monthly chart. Oh, boy. Well, okay, if you got pretty damn deep pockets like that, then, we can pull that chart up. But my hunch is, a monthly chart, you are probably suspect to huge trading range. So just out of curiosity, I'd be curious to see what this thing looks like. So monthly, this would not be a trade, right? This would be an investment, I guess, would be the best term to use. And I hope you guys see that the stock market, by definition, is a rise-only market. The United States, the way the system is set up, they can't have their stock market go down. This is a really good example where this is a rise-only market. This should have been sort of the start of that Da Vinci nightmare. Everything fundamentally that should have happened to break the U.S. stock market and to break the U.S. economy was happening. Because remember, we live in this stupid deficit world, thank you banksters, totally screw us, where the economy must grow. It has no choice. Now, it might grow through inflation because there is no natural growth. So you get this kind of situation where, as stock investors say, well, if you're going to shut down the economy, there's no way in hell the economy is going to grow. And since these stocks are priced for perfection, they must grow. Isn't that weird how my goddamn camera chopped off the top of my head there? Ah, that's frustrating. Do I have to lean back so you can see my whole head? Anyway. What happened here? Shouldn't we be mortgaging our kids' future and basically screwing everybody over? Standard of living getting destroyed? Shut the fuck up and give them the goddamn money because the market has to grow. The bankers must make their positive return on their investment. And boom, up goes the market. So, unfortunately, we live in a really awful, awful time. This is hearkening back, and I show you guys this. This is hearkening back a long way. The last time that we were in this kind of environment was back here. The only difference was back here, the politicians that were in charge were not the bank puppets. And they let the market break when the market was supposed to break. This is supposed to be a deflationary cycle. And so the guys who are in charge of the U.S. economy right here said, look, if you were so foolish as to get involved in the stock market through this, and you did dumb things like go and borrow money to play the market, well, you should be punished. You're an idiot. That's just bad economics. You know, that's the ant and the grasshopper. In this case, the grasshopper is out there freezing their ass off because they made a really stupid decision. They didn't save their money. Guess who wins? Well, I guess the other way around. What happens to banks and what happens to all those stupid humans that are grasshoppers in this scenario? And all the banks that go and lend out money to the public. Of course, remember, the banks, all they care about is they want a percentage rate of return on their lending. They don't give a shit about the standard of living of somebody. That's irrelevant. They don't give a shit about the quality of life of the country. That's irrelevant. In fact, you can't control a society unless you have them totally and utterly indebted to you. And basically, they're your bitches. So the banks had no control over society. Did they take advantage of this? Did they maybe encourage this? So that by the time we got to here, the now replaced politicians, now these politicians go, oh, Mr. Banker, we don't want people living in Hoovervilles. We want the party. We want everybody to be, have a job. And of course, be able to go out and go to baseball games and go and buy Johnny, G.I. Joe with the Kung Fu grip and all that. So, yeah, we'll go into debt because, hey, that's just what good nations do. They guarantee, and the worst part about our democratically elected politicians is they are encouraged to make promises to the public that are completely unrealistic. Hey, you can have a retirement. We'll give you this pension. You can have all the medical care in your old age. Guaranteed. We will guarantee the purchase of your house. Guaranteed. How has all that gone? Did you notice recently that they're actually starting to talk about cutting Medicaid and Medicare and all that kind of fun stuff? It's already happening. In this world, it's like if you played the stock market, if you bought stuff on margin and the market broke, tough shit. Margin call. If you see you in bankruptcy court. If you made a really bad decision, and there's no such thing as too big to fail in this world. If you are Joey Diamond and you make a bad investment decision, we will see you in court. Or, all your assets are liquidated and handed over to the creditors, whatever they can get left. Now, did you notice? You can't even really declare bankruptcy in this world now. You declare bankruptcy in like student loan debt, and I thought this was really cool. There's a guy on Twitter who's saying, student loan debt now, technically, you can't even declare bankruptcy to get out of it. But what prevents you from going out and taking out a whole bunch of credit cards, paying off the student loan debt, and then declaring bankruptcy? Couldn't you do that? Seems logical to me. I live a life neither a lender nor a debtor be. I don't have any debt. No debt. Bank accounts have big six-figure balances. I really don't want it above six figures because the insurance, like CIPF, And FDIC insurance actually, it used to be $1 million. Now it's only 100,000. That's kind of interesting. Who changed that rule? The banks, dickheads. So don't keep more than 100 G's in any one account. You're asking for trouble. Anyway, so this world, this was the process of cleaning up the bullshit from this world. Right? It's just that simple. But we don't live in this world anymore. Because the banksters officially took over, and now you can't even declare bankruptcy. That doesn't even exist anymore. You still owe the money, you cocksucking son of a bitch. I mean, what the fuck happened to our society? Terrible. So, now we're in a situation where, and you even heard Powell even say the other day, I've heard him say it repeatedly, there is no debate about raising the U.S. debt ceiling. There is no debate. He specifically said, quote, this ends only one way. U.S. citizens must approve debt ceiling debate increases. There is no other way this ends. We are trapped in this vortex of banker hell. Woohoo! So I would make the argument, there was a guy on the site years ago, and it's so funny. You go on YouTube, these shorts, and now you've got the weirdest people who are Da Vinci fans. Like there's one lady who did like a YouTube short, and she called herself like Crypto Mom or something like that. And she doesn't even refer to Da Vinci as his real name. His name is Da Vinci J15. So it just goes to show, are you on a first name basis with Da Vinci? Not really, but he's Da Vinci J15. Anyway, that's a whole other side. But anyway, the point is, and I actually like the idea that we were supposed to go through a sort of worst case scenario. And I don't know, maybe you draw it off of something like this. And we used to call it the Da Vinci Nightmare. And sadly, and we used to draw it like off of like this range here. So there to there. And this was supposed to go there down to there. And interesting how this was actually the last moment that we lived in a real world in a weird sort of way. This was actually the point at which the Donald Trump was foreseen as actually realistic next U.S. president. And I also think too, keep in mind, Mr. Trump's a deal maker. Could he have gone to the banks and said, look, I know what's happening here. I don't really care. You want to go and hyperinflate the economy, great reset, whatever the hell you want to call it, Klaus's circle jerk, Mark Carney's $100 trillion of loaning to green our society. What a load of horse crack. Point here is you can clearly see that this whole megaphone pattern that was about to play out, and we were going to get our great Da Vinci reset here, clearly something changed. And it started the hyperinflation world that we live in. And of course, the hyperinflation world that we live in was exacerbated by this sickness, which, as I said earlier, if you looked at the options derivative information, there was blatant, obvious information. Hell, I remember Jeff Bezos himself said that he was selling almost all of his Amazon stock right here. And if you look, of course, at all the options derivative information, remember I told you that was January 2020. And look at what they did. So they knew something really nasty was about to hit the shit. And you could also make the argument, boom, boom, boom. The market went exactly where it was supposed to go. And oh, what a big surprise. It just came right back down to the original buy level before the whole Donald Trump shit. Keep in mind, this was Donald Trump's presidency. See our investor 11235. What the hell does that mean? What are you saying? Rotted teeth outcome. All right. That was Socrates' complaint with the Republic. The doctor loses and the candy store vendor wins. Yeah. Well, you don't want to look at my teeth. Yeah, I mean, that was ridiculous. So the point of the matter here is, you know, again, remember I showed you that BITO, options expiry, brutality. I mean, just absolutely brutally corrupt. Well, this is exactly what I was referring to with those leaps expiry. It's the same thing. It's identical. All right. Wow, there was a mouthful. Then you're like, Brian, what was it? What was my question? Okay, so your question was, on a monthly basis, is that a half decent short idea? First off, we're dealing with months, so this is going to take forever to play out. Right? This is not going to play out next week. It's interesting, of course, that we're coming up into the Ides of March. Usually the 2 times a year that the market breaks, and if you don't know this, more alpha, write this down. Alpha, beta, ooh, ah. Alpha, beta, ooh, ah. Who can tell me what movie that's from? If you can tell me what movie that's from, I will give you a big kiss. Now, if you can tell me what movie that's from, I'll give you one of these mugs. I'll even buy it. Where the hell's the camera? There's the camera. Look at that kick-ass mug. Can you see that? Look at that. That is just so boss. It's got, like, you want to learn, you know, like, if you want to learn technical analysis, all you got to do is just buy this damn mug. Everything we teach on the level 1 course is on that goddamn mug right there. Go and pick up one of those. I mean, look at this. It's like all the way around the mug. It's the whole damn course, Technical Analysis 101, right there. Oh, my goodness, Cotter, you cocksucker. You knew it. Oh, well, now I owe Cotter. You got too many chickens, though. Jeez, now I got to send you a goddamn mug. So, good remembering. Connor's actually old enough. I think he's about my age that he would remember that. So, now I owe Connor a fucking mug. Hey, there's Grim. Yeah, hope class. Dude, you and I have been like ships passing in the night. We really have to get together, man. I'm not quite sure why we keep missing each other. Anyway, but yeah, I mean, so hopefully, if anything, you know, Connor's going to get one of these free, the bastards. Probably the one guy who doesn't, you know, he could afford to actually buy one. But go in if you're interested. That mug is just incredible. It's absolutely incredible. And actually, we even have a mouse pad with the same image on it. It's stunning. Everything that we teach right there on one coffee mug. You can get that in the merch store. Okay, back to our story. Okay, so as we said, we live in this deficit world. We live in this world where you know, the economy must grow. Now, if it has to grow through inflation, the banksters don't give a shit. The economy must grow. So if this economy craps out, I think we all can see with glorious Technicolor exactly where this market's going to come back to. So interestingly enough, and I've often made the reference that, you know, we've actually long overdue. I don't know whether you guys have ever watched this. I was playing this in the Daily Brief. I think it was on Friday. And then, of course, it's always a question of where the hell was it? But this was so much fun. I remember this day. And this guy's going absolutely crazy. And I told everybody, watch the volume. You can actually tell what's going to happen here if you just watch the volume. Volume spike, going lower.
Freeze for you guys. Oh, even yard trading, the fingerprints are traded. 9.5 hour trading.
I love that. I don't know whether you can hear that or not. You probably can't. But, man, great, great video. So if we get another one of these kind of scenarios, then it means you can see probably we're going to have another test of this low, you know. They always say wicks and tails like to be eaten. So you can see the size of this tail. It's pretty darn big. Candle body lows for trade location. So there's an interesting candle body low. I wouldn't be surprised if we actually have to do a Wyckoff check of this level. But there you can start to see trade location. We could probably also do things like reload zones. Notice that's actually the last time we actually have a real double bottom. Did something happen there, Chris? Are you still with me?
Still with you? I don't know what you're referring to. Everything seems okay on my side.
Alright, I guess maybe everybody left. I talked too much. It's already 1:30, eh? Well, anyway, I don't know how long this show is going to be, but as I said, I told Liam I was not going to be there today. So could you make an argument that there is a realistic case for, say, a 20,000 Dow here going forward? Yeah. It's not unrealistic, I'll tell you that much. Is it a trade? Oh boy, that's a tough one. Remember, you know, something like this probably does happen if that debt ceiling debate, you know, push comes to shove, where the right wing of the U.S. political body, the U.S. citizens themselves, say, look, enough is enough. You fucked us as much as you possibly can, Rothschilds, Joey Diamond. You know, there's enough of us in the world, because keep in mind, I don't like this kind of market. You know, it just keeps rising. Shouldn't we debate mortgaging our future? No, shut the fuck up. Just give them the money. Because, you know, you think it's bad, you guys down in the States. In Canada, and the worst part about it is Canada is now a very, very socialist country. They even did a survey, and these darn socialists don't understand this. That they even did a survey, and something like 45% of Canada wants to be a socialist country, which scares the hell out of me. But look at this inflation. I mean, basically, look at this house inflation. How's a kid coming out of high school ever going to wrap their head around the idea that they need basically the better part of $1 million just to buy a house? This carbon tax nonsense. What a load of horse shit. Look at these inflation numbers. I mean, you know, you guys down in the States are going through the same thing. I mean, the national debt. This dickhead was fucking elected as a minority government. Not even a majority. He has no mandate whatsoever. And yet he's handed our country basically just a mountain. Literally doubling the national debt. And he has no mandate. He's a minority Prime Minister. How on earth does this happen? Klaus, Great Reset. Thank you very much. Total scam. Drives you crazy. So, if anything, I would prefer that we get out of this world. But the problem is, I don't think that the public has the backbone to go through one of these situations. Now, the irony of it all is in 87, we had, quote unquote, a crash, and the market lost about 20-30% of its value. If we actually did a healthy move down into technically appropriate levels, you can see that that would equate to about a 40% reduction in equity prices, and I just don't see the public being able to stomach that. They'll just start freaking out. And, you know, it doesn't make any sense how the democratically elected politicians, one relatively new politician, and unfortunately the new people to the political system, they have no power at all. So he's sitting there going, what are you doing? You're just going and diluting the crap out of our nation's wealth, out of our nation's currency. out of the capital stock of our country just to keep these goddamn stock people happy? Oh, and by the way, all these fucking stock cocksuckers all sold up here. They actually are waiting for the government bailout to buy everything right back. And that's exactly what they did. Remember, Bezos said that he sold everything up here. And then he said, oh, by the way, I sold everything up here too. Well, that means that you must have bought it back somewhere along here. Oh, yeah, well, actually, it turns out I bought it back when the government guaranteed the floor in the market. So, it's interesting. Dave Chappelle, right now, I see all these shorts. He loves making reference to Donald Trump, where he said, and I'm going to paraphrase here. I'm not going to get it right. But he said, I knew Donald Trump was for real when he stood up on stage and he looked at Hillary Clinton and he looked at Barack Obama and he said, this system is rigged. You want to know why I know it's rigged? Because I take advantage of the system being rigged every bloody day. And of course, Barack Obama and Hillary Clinton go, oh, no, it's not. No, it's not. What are you talking about? We're Democrats. We're power to the people. And he's like, bullshit. You want to know why I know they're saying that? And I want to know why that they have no case whatsoever? Because their largest donators to the Democrat Party also take advantage of the exact same rules that I take advantage of because I know the system is rigged. And Barack Obama and Hillary Clinton were like, can we please change the subject? Can we change the subject? Next subject, please. Next subject, please. Can we talk about something else? Didn't even have a response. So, because of all of that, I don't think this scenario is going to happen. And I hate to say it, if this scenario does happen, it might actually mean there's blood in the streets. It might mean we are probably heading down towards the path of like a U.S. Civil War. That wouldn't surprise me one bit. And I got to tell you, in the entire time that I have been alive, 50 years, I've never seen an environment here in North America where it could so very easily turn into a civil war. I mean, like I said, this gentleman here in Canada, he can't even show his face in Western Canada. The last time he came to BC, people were openly throwing rocks at him as he was walking down the street trying to do one of these, hey, I'm a man of the people. If one of those rocks hit his head, might have easily killed him. Could happen. In the States, of course, in Canada, all we can do is throw rocks. In the States, gun ownership is still technically legal. In the States, this guy couldn't show his face in sort of rural states. That's how bad the polarization is here in my country. All we have are rocks. That's all we can do. And he's like, I'm not going back to the West ever. It's terrible, terrible. But in the States, could I see this deteriorate into a civil war? Yeah, I could see it. Wouldn't surprise me. Yeah, there's no negotiation anymore. It's either you're one of them or one of us. And usually that has to end in some sort of horrible bloodshed. And one side is politely told to shut the fuck up or you're going to die. Keep in mind that the last Great Reset, there was a guy running around Europe murdering people right, left, and center, and nobody could figure out how the hell he got into power. The reset before that, there was a U.S. Civil War, where one side had to tell the other side, shut the fuck up, or you're going to get a musket rammed down your throat. or a Sherman necktie. Let's put it that way. The reset before that, the British bankster class tried to tell the American 13 colonies to shut the fuck up and get down on your knees and do what you're told. You all know where that's going. And the American colonies, unfortunately, a lot of people had to lose their lives, a lot of bloodshed, but they were ultimately able to tell the banksters to go fuck themselves. So keep in mind, these great resets historically are very, very nasty. This probably isn't going to end politely, folks. It sucks. I've been begging Zach to get that goddamn property in Hawaii bought so that I can relocate Liam and I over to there, or somehow. And then we can just sort of forget about North America, because I have a feeling North America is going to end very ugly. Or conversely, can I get my butt into like rural, deeply embedded countryside of Europe and like, you know, rural Portugal, and sort of just, you know, disconnect. Because a city like Vancouver, British Columbia, Canada, oh man, there's no industry here. That's the scariest part about this. So if and when the Canadian dollar does, and let's say we go into some sort of crazy civil war scenario here, there's like 1 million or 2 people living in the lower mainland here. There are no jobs. There's no food. There's no industry. They're all here because of artificially runaway real estate speculation. That's the only thing here. There's nothing else. This situation can't end well. It really can't. But oh well, we'll see what happens. So, back to your original question. Is this a trade? I don't have a problem. As I had said before, if you are betting against this being artificially propped up and finessed higher, that's a tough bet. Because this is kind of like betting short against Bitcoin. Unless you're coming in right at the very top of the market, you have to know over time Bitcoin is a rise-only market. So if it's a rise-only market and you're betting short, the odds are stacked against you. I would argue the stock market is very similar. Having said that, right now, are we in a good trade, short trade location? I don't think so. 2 months ago, up into midpoints of reload zones. And if you remember, in the level 1 program, we teach you the institutional fingerprint. Where did the market put in the high? The mark that made the high plus the preceding bar. I would argue there is your institutional fingerprint. Something like that. So, could you justify being short in this area and risking the new highs? Maybe go buy like a leap option or something like that. That's not a terrible idea. I will say though, at this level right here, we're kind of leaving that zone, eh? In fact, actually, it's not that low. It's there, right? The bar that made the high plus the preceding bar. So now we're actually lower than that level. So I think the quote-unquote trade is leaving the station a bit. Seasonally, if we go back to sort of like a weekly chart, seasonally the adage goes, buy when it snows, sell when it goes. So you can see September, October, November, buy when it snows. That's when the snow starts. Sell when it goes. That's sort of like up in this area. April, May, June. So believe it or not, I actually like a move up into that area for trade location. Also notice too, look how there's a big old hole on the charts right up there as well. Could this be... So from a monthly perspective, I think we're a little bit low to be strapping on those shorts. I really like this area up top here. And, you know, you'd buy your leap option, and this would be your risk window, right? That area right there. I like that as a risk. If you're coming in to buy your leaps, and, you know, the best part about leaps is that it's a put option. So that means that the maximum risk on the trade is the purchase price of the option. In fact, you could even say on this weekly basis, institutional fingerprint, right? That is your institutional fingerprint there, where the bar that made the high plus the preceding bar. Really, you could make, well, I mean, really 2 bars, but that's sort of previous move. And I think up in this area, that would be sort of acceptable trade location. And you know what that is? That's this chart. So I don't know how the fuck I did this, but then I don't really know how the fuck I do anything in life. But I actually had the gumption to strap on the short. It was a demonstration trade right there. So that's that same kind of trade. Can you get short from up against the top? Could I justify coming in and shorting Apple here? No. It's not attractive. In fact, sold half of the position on the test of the lows. Stop at scratch. If we do work our way back up here, I actually get out of the short, not get in. Could this thing roll over and keep working its way lower? Sure. But right now, I'd even say from this level, you can kind of see, right? If we do longer term 50% rules, and we just say something like, you know, this thing probably is good to come back to trendline support, something like that. Remember, 50% level is supposed to be our sort of keep you honest indicator level. So something along those lines. If you short here and you take profits at the 50% rule versus your risk, you'll notice that basically the equation is basically 1-to-1. You know, the short trade might work. It might. I mean, this is where we probably ought to go. Could they pull a little FU move and do something like that? Sure. So that's why, you know, I like the idea. Let's try and get short from up top here. And this is your risk. And this becomes your reward if it works. Now, I like that kind of metric. So the same thing on the Dow. I don't necessarily like shorting here. I suppose, you know, if you think that same logic, this is going off of a much lower low, though, all the way down into there. But, you know, if we do the same logic, let's go 50% rule. That's probably a good technical objective. I like that. That works for me. So right now, I suppose if this M does come in, you could say, well, Brian, look, I'm just going to risk this M. Maybe I'll buy an option. And if the M doesn't work, I'll buy a long dated leap. So if the option, if the trade, if we go up and take out this high, I'll just liquidate the option and just salvage whatever capital's left. But I'm kind of thinking that I'm going to gun for, whoops, well, I can do it, I guess just draw it. I'm going to gun for 50% rules, and I'm going to risk that window. Okay, I wouldn't fault you. Still don't think this is the best trade location. I would prefer, if anything, what I would suggest you do, and let's even do this together, is let's see if into this seasonally appropriate time of year for markets to break, let's see if we can get a nice little FU move against these highs. Because I think that's what they're going to do. You know, fluff up against that high, maybe even fill in the gap. Let's see if maybe we can get something like that. Now, you show me something like that, and I'll join you on the short. What do you think? Actually, there's nobody else here. Hey, everybody left. That's hilarious. Actually, B's still here. Who's B? Well, B, I am a representative of the RCMP, and you are under arrest for bad-mouthing substitute drama teachers. Uh-oh. Now I've done it. Got you, B. I have no idea who you are if your name's just B. You could be anybody. You could be substitute drama teachers, although, frankly speaking, I don't think he has the IQ to understand half of what we talk about. But anyway. So, there's my candid answer for you with regard to shorting the market here. I don't really like that level. Having said that, M's are M's are M's. I mean, if we just start cranking lower here right out of the gate tomorrow morning and that M confirms, I would not fault you if you said, Brian, I'm going to short that M. I just don't think it's a very good trade location. Looks very suspect to me. Very rarely do I find that if you take trades at 50% levels, they actually do well. Usually they end up getting stopped out. All right. What do you got there? Liquidity. Message retracted here too. Brian found some information. 2012 election, 2013 Bull 2, 16 election, Bull 3, 20 election, Bull 4, 24 election, 25 Bull. Okay. Well, and that's just it too, right? Is what do we got coming up in front of us? What I could see them do is notice there is a big gap right here. So you might find that this actually turns into some crazy ass harmonic. There to there to there to there. And this is like right down to filling the gap. 88.6 I think is a good harmonic level, something like that. And you get like a flash crash into the Ides of March, right? So the Ides of March are there. Right there in that window there. Some sort of flash crash that fills in the gap, but that's a bullish harmonic, which means that should we pivot here, this market could take off like a rocket higher. So yeah. So as Grimm says, remember these are earnings engines. Is the American public okay with basically like a 40% haircut of those earnings engines? If that's the case, then SpaghettiOs. I don't think it's the case. I don't think politically, if anything, if you started seeing that happen, you're going to find that the Republicans in the U.S. government are going to be like, hey, we better be careful here, or the Democrats are going to blame us for the market getting wiped out, and then we're not going to be able to be reelected. Because remember, after Mr. Hoover did the right thing, and this is the worst part about all of this, is that the right thing, the thing that's going to maintain your country's stability over time, it's currency. I mean, you see what Venezuela is doing. You see what Zimbabwe is doing. I mean, the countries have gone to shit. Why? Because their currencies have collapsed. Could that happen to the West here? Sure, why not? They're doing exactly the same fucking thing. But the reason, what's scary about this is that this politician did the right thing. He said, if you invest in the stock market, if you buy parabolic moves, if you chase Bitcoin at $40,000, $50,000, $60,000, and you listen to people say, the technical analysis doesn't matter, just buy and you'll make tons of money. Is that good financial behavior? Is that the right thing to do, ants and grasshoppers? Well, these politicians right here who did the right thing and let this market correct and deflate, did not the United States of America come out of the Second World War as the most strongest and powerful nation in the entire world? Yes. Why? Because they didn't go and borrow their asses up to the tits in debt. They let everything go bankrupt. There was no such thing as too big to fail. There were no zombie economies. And so as a result, the United States economy was set to just boom. But now we are in the too big to fail zombie economies. The solution will be to print more money, i.e. dilute this thing here that this is priced in. And so as a result, this thing just keeps going higher. And of course, like I showed you, everything else. I mean, just, what happened in 1971? Actually, I think this asshole was born in 1971. And you better get used to it. This is nothing. And maybe a price of a house in 10 years is $5 million. $10 million. Not because the houses are so great, but because the currencies are worthless. Very realistic. All right, so there you go. There's my answer for you. I don't know whether that helps or not, but wow, you sure triggered me. Number 4, I recently watched some videos in regard Jim Simmons and his 66% rate. Well, that's good. My question, does it even make sense anymore to manually trade? Or how long do you think until some guys stamp out an AI that will make manually trading obsolete? Well, they always say AI is only as good as the human programmers, and I've seen lots of AI that just go completely off the rails. I watched one guy's quote-unquote trading algorithm bot spend like 3,000 Bitcoin on an altcoin once in the 2020 bull market. It was one of the Z coins. It was hilarious watching it happen. You saw what happened with Microsoft and its AI, and how it went completely off the rails, and I think said it wanted to commit suicide or something. So I think this AI stuff still has a very, very long way to go. I would argue that the only people who actually really know how to build trading algorithms and run them are the people that actually know how to manually trade. Like, the only people that know the power of things like reload zones are the people that have manually gone in and taught themselves this. I can absolutely guarantee you, without a shadow of a doubt, if I go out into the street and I just tell somebody, look at, buy 61.8 fibs, you're guaranteed to make money, it's the easiest trade you'll ever do, and I give, like, let's say 1,000 people $1,000, and all they had to do was just go and buy 61.8, I would guarantee you 99% of them, number one, they won't even be able to buy the 61.8. They'll screw the order up. So I don't know whether AI would be able to do it. There are a lot of AI bots. I told you also too that when I was prop trading, I used to literally watch the DOM 24/7. I was surrounded by professionals who all knew exactly what they were doing. They all understood the game. And literally, we would just banter amongst ourselves and comment about how we can watch the bots come alive at things like 61.8s. What's fascinating about that, though, is that, try and understand, this is all written by humans. So there are some humans that know that other humans write bots to buy at 61.8, and they will actually write bots to attack the people that buy at 61.8, because they know that those bots have a certain amount of wiggle room, only like maybe 10 ticks. And as soon as 10 ticks is moved beyond 61.8, they'll close those positions out. So literally, as we're coming into levels, number one, you see the 61.8 bots come alive, but then you also see the anti-61.8 bots come alive, and it becomes like a feeding frenzy. And I don't know whether you ever watched what happens if you throw a piece of chicken meat or goat or something like that into a pool with piranhas. It becomes absolutely insane. Just absolute chaos as they just tear the meat apart. So you got to ask yourself, which bot are you actually trading against? Are you the 61.8 bot, or are you the target of another bot that's coming after you? And the best analogy that I can give that you'll understand this is the second Matrix movie, where the Hootie German guy, this guy is technically a bot that is running in the Matrix. He's not a human. He's not a slave. He's actually a computer program. And he actually has, this computer program, he has a whole bunch of minions that are all his slaves. So in a weird sort of way, we know that he's a computer program, but he's serving one interest. This guy's a computer program, and he's serving this guy's interest. So you have literally dueling bots that are going after each other. And really, your job as a human is to understand what's going on in the marketplace. It doesn't even necessarily mean that you're going to take a trade, but you have to understand the background of what's going on. And you have to acknowledge these various different players. The bottom line here is I'm trying to teach you to be a bot. But understand that bots have no expectation of being right 100% of the time. In fact, nowhere in any bot code is that reference ever made. It's if this condition happens, then do that, else do the other thing. So if it's something as simple as if a moving average is crossed, buy, and if the market moves back below the moving average, then you sell. Nowhere in there does it say 88% of the time, 90% of the time, 60% of the time, 70% of the time, 100% of the time. It just isn't written anywhere in there. But you have to understand that a bot will close out a position at a loss if the conditions are present. And it has no emotional response. And that is where humans fail, is they just can't make that leap that you're not going to be right 100% of the time. In fact, I can absolutely guarantee you will be wrong. And it's painful and it sucks. You lost money. But hey, it's part of life. Theoretically, the market is supposed to be random walk. And to all intents and purposes, if somebody held a gun to my head and said, Brian, is the market predictable or is it random walk? I would say the market almost always is random walk. And every once in a while, you get little windows where you're like, whoa, I've seen this before. When this happens and this happens and that happens, usually that happens. But that's not every day. And in fact, one of the biggest issues and I often talk to you guys about this, is I want you to have 3 reasons for a trade. The number one reason is always the most important reason, and that's location. If you get location correct, you can actually screw up a lot of other things. You can screw up the momentum, you can screw up the price action, and you still make money. And that's like, this stuff. Can I force myself not to be a stupid idiot and come and buy up markets and buy the top of the market? And can I force myself to come in and buy against the bottom end of the range? I mean, maybe this isn't the best example, although I do like this, but, like this lit, for example. Can I stop myself from being an idiot when I see this huge green candle and coming in and buying here? Can I force myself to wait for things like W's to come in? If I do that, and of course, location, I'm at the bottom end of the range, then I think that the statistical odds slightly turn in your favor. But nothing is 100%. In fact, I don't know if anybody even knows. You're right, B. I don't know whether anybody even knows or not, but when guys go to Vegas and they play like roulette and they have systems, do any of them ever have a system that's 100% right? No. In fact, my old man, he used to love playing blackjack, and he claims he could go to Vegas and make all the money he wants just counting cards in blackjack. And even then, if you're really good at counting cards, the odds are just slightly in your favor. But they're in your favor enough to actually make it worth your while. And I would make the argument in trading, most of the market, most of the time, is random walk. You're going to have bots buying and selling constantly. They're just working what they call their edge. And what I'm trying to teach you, and this is a good example, if I can force myself to come in at the bottom end of the range, if I can force myself to wait for momentum to show that it's starting to point up, even though price is still making lower lows, if I can force you to use indicators like Willie, for example, that can clearly demonstrate when markets are oversold, if I can force you to wait for things like W's in price, which implies a trend change, then the odds are slightly in your favor. And that's what we need. Could you program a computer to identify all of this and trade as an algorithm, as a bot? Absolutely. Could the bot and could a computer programmer come up with this logic on their own? No way. Never seen it happen. Because they always, remember, the bot is only as smart as a computer programmer. So most of the public comes into the market when the market's doing this. So by definition, they're excited, they're getting interested. Hey, look, everybody's getting rich. I got to get rich too. And what they don't understand is that actually the way to make money in investing is you have to buy when other people are crying, and you have to sell when other people are yelling. And most people just don't understand that, and they never will. Could a computer be programmed to do that? Absolutely. But if this guy was writing the computer program here and he saw this range, then he would have to say, the computer programmer would have to say, well, I can't even really think about getting involved in this until we, at the absolute least, get down to 61.8s. And probably a bot came in and bought this level. Now, did they sell and take some profits up here? I sure hope to God for them they did. I love the idea. Again, venture capital. I love the idea, and it seems that the statistical odds of this working seem to be very high. Nothing's guaranteed, though. Remember that. Come on, you stupid tool. Doesn't want to work. Anyway, but I love the idea of focusing on 78.6 to 88.6. But even then, bought 88.6. Wow, you look so fucking smart. Did your robot take any profits heading up here? Or did it get lulled into, hey, I picked the bottom, I'm the smart, I'm the man, and I'm just going to ride it to the moon, and oh, geez, I just got wiped out. You better have programmed. Remember, I'm a really big fan that I love things like, these are just basic rules that the manual trader teaches themselves, wherever the damn tools are. Where the hell is it? Maybe it's this one. There we are. If I buy that 88.6 like a boss, and I'm going to risk to a break in new lows, well, I better make damn sure that if I get up to 2-to-1 risk reward, I pay myself for all my hard work. So boom. This case, had to wait till there. Sell half on a double, whatever, 2-to-1. Move your stop to scratch. In this particular case, you got stopped out at scratch on the remaining. But I'm a profitable trader because I forced myself to take some profits at 2-to-1. Could you program this into your bots to do this and your algorithm? Sure, why not? Do people? Well, it's only a function of how good they understand how to manually trade. And weird thing is in a weird sort of way, you learn how to manually trade correctly. My job is to turn you into a robot. So, Lucas, have I turned you into a robot? Remember, robots love if then else statements, right? Don't they? That's basically the robot's bread and butter. If then else. So if I've done my job, I've turned you into a robot, Lucas. Could you program a computer to do this setup hunting? Absolutely. So there's my answer for you. Okay, I think I'm going to leave the rant at that. That was only 3 hours, so I hope you all enjoyed that. Got $72.65 in tips, thanks to guys that actually I really shouldn't ask any more money from because they've already given me a lot over time. But nonetheless, thank you, everybody. Appreciate your generosity. Maybe the rest of you, if you felt like you got some value out of that, help the cause out. Maybe even consider joining our site. I'll tell you, the algorithm, totally kicking ass. You could argue that the bots are actually lining up on the buy side in crypto. And for whatever it's worth, I've told a lot of people this. You know, these 4-year cycles, this information here is telling you pullbacks are buying opportunities. Do you hear anybody in the public saying that right now? Not really. So there you go. Brian thinks like a robot. Brian is a robot. Shh, don't tell him that. Shh, quiet. All right. All right, have yourselves a great day, everybody. PMA for the win. I'm going to sit here and feel stupid because I didn't go and be with my boy here today, although, of course, we're absolutely buried in snow here right now. Probably it's best that I don't drive the car because I don't have snow tires, but nonetheless, just to give you an idea of what Vancouver looks like today, I think I posted in the lounge earlier. Where is it? It was a bit of a snowmageddon when I woke up this morning, so as a result, I have to make the adult decision well ahead of time because he has staff and all that kind of stuff, and we don't want anybody left out on the cold, or no pun intended. So, oh geez, I don't even know where it is. These guys are all just posting a gazillion charts. Anyway, I did share it this morning, although I don't know what I did with it. I don't know if this is today or yesterday. This might be yesterday. Wow, look at all the fun charts. Great. I got to say, this is a really fun community to hang out with and just talk charts. This must be it here. Is that it? Nope, that's not it. Where's the damn snowmageddon? Anyway, there's today's reference. Today's 25th. Today's 26th. Maybe that was yesterday. Hey, there's 26. All right, so it must be in here somewhere. Where did I post it? Where are you? Snowmageddon. No, I guess it was after I posted all these charts. There we are. So there's Vancouver today. Vancouver doesn't usually snow, so if anything, Eddie, if you're looking at this right now, you're going, Brian, you promised it doesn't snow in Vancouver. Well, not always. But you couldn't even see the North Shore Mountains this morning. That's how overcast it is here. So I'm going to take a day and just stew in my juices and be pissed off at myself for letting my son down. But anyway, that's what I do. All right, everybody. Have yourselves a great day. PMA for the win. All the best. Hope you enjoyed that. And the only thing left for Brian to say is bye for now.